Oh, good morning, good morning. Let's put that here. All right. Man, we're seeing Goldie lose some strength here. Following it was unemployment claims. We got a big dump. I believe something else happened because this happened at 11:10. Unemployment claims was at 8:30. So gotta dig into fundamentals. Why gold possibly dumped over here? It's a pretty big move. Was that like 1,000 pips? Holy. What the daily candlestick did. On the open. Yeah, about like 2,000 pips from the open. The daily candlestick did. So we saw some serious sell side pressure come in yesterday. So we're gonna see what this was about. With the unemployment claims, we had a dump first and then price continued to fill up that range we were talking about on stream. But following unemployment claims, you can see there was nothing else. So it must have been like a talk or some kind of a scheduled event or, something, as we're heading towards the end of the week over here. Maybe it was like weekly candlestick pullbacks. We'll see what went on there. But today we have core CPI. It's coming out, New York session. And we're expecting good numbers here. An increase to 0.3%. Even if we get 0.3%, as you see, like it'll probably come out neutral. So bias on this is neutral. Looks like for unemployment claims, we got bad numbers. Yeah, we got bad numbers. But price had pulled back during 8:30 and then continued to move up. Which with bad numbers for the dollar, he had 8:30 went up. It went up. Bad numbers for the dollar and then price went up. So still respected PA over here. And proceeded to fill the range. Like this range is going to get filled. The question is like how it gets filled. Sometimes it reverses a few times and then it has to give it a few more goes. Like even here, small reversal, but it was going to get filled. The question was just like how it was going to get filled. Because sometimes we're going to fill it properly. Sometimes we're going to like dip around like this because also the market is a bit ahead of reality. So it paces itself, especially when we know we got news and everything. It's quite interesting actually, but it paces itself. So I was like, okay, so we don't have to hit this right now. We'd rather like just wait a little bit longer, hit it later. So you can almost think that this whole structure here is somewhat, in a sense, predetermined in a sense to when price is going to be coming up towards like 50.79. That's why we say the market is always right, because it's not random. But right now we are trickling to the upside. You can see a little bit of compression over here. Daily time frame is bullish, 1.25%. I see we got some pretty good trades this morning taken here in the group. Secured 24 pips, though it almost hit my SL and was saved by 1 pip. Oh, wow. Let's go. Saved by 1 pip. Slightly early, riskier entry. Had the reaction I hope for, 0 drawdown. SMA cross with liquidity grab, anticipating price to break out the range. Aggressive BE at resistance. Clean entry. See, down for the day already. Nice buy. Break above the highs to keep moving up. That continued distributing. What happened? Let's see on the 1 minute. Okay, so it pulled back. So sniper exit. Yeah, it's a choppy day overall, eh? Like, if you look away, it's also like moving up right now. It's not doing it smoothly. It's kind of like creating supports over and over and over again. So it like shakes you out. This kind of market environment will shake you out of your trades. Nice little break here. This happened during Asia. Came to try to fill up some of this range. I think maybe about 65% of it got filled. See, from here to here. Ooh, close to 65. Just needed to push down that like 40 more pips. Yeah, but still surprisingly seeing so much volume on gold. Like yesterday's daily candle just completely melted. Gold bounces back from near 1 week low. Gold rebounded on Friday, recovering from nearly 1 week low as investors awaited key US inflation figures for cues on the direction of interest rates following robust jobs data. Could have been a pricing in as well. Yesterday's massive dump for core CPI. That price can continue moving up here today with some numbers. With volatilities as heightened as they are and these big round levels offering, you know sort of indicators of where positioning might be. Big breaks certainly accelerate these moves. The gold dropped to about 3% to a near 1 week low on Thursday. Breaking below the $5,000 an ounce key support. Selling pressure intensified after an equities rout. Precious metals came down with equities last night. They didn't really have much of a macro catalyst. Asia shares retreated from record highs on Friday as worries about shrinking margins in the tech sector hit the likes of Apple. The yellow metal also come under pressure after data released on Wednesday showed a US jobs market began 2026 on firmer footing than expected, reinforcing the view that policymakers may keep rates elevated for longer. So now we wait for inflation data due later today for more cues on the federal monetary policy path, with a 25 basis point cut currently priced in for the year. Probably 2. The first of those expected in June. Non-yielding bullion tends to do well in low interest environments, indeed. Oh, look at this. We got gold flip its discount in India this week for the first time in a month on subdued demand, as volatile prices deterred buying. While in China, market saw robust demand as it heads into the Lunar New Year celebrations. When is that? China New Year. 17th. That's going to be next week, Tuesday. So we got in China saw robust demand as it heads into the Lunar New Year celebrations. What role does gold play in this Lunar New Year celebrations? Gold trades at discounts in India for the first time in nearly a month. Finally get discount. Price has been so expensive, finally pulling back. Yeah, the Indian market, they're very stubborn when it comes to these prices. Because, it's like, it's a lot of poverty in India, and it's a tradition to buy gold. So even like if you're poor, you spend all your money on gold for these festive seasons or weddings and that sort of thing. And man, and the prices when they just skyrocketing, you can imagine like how much more pressure that puts on families and stuff. And it's just been skyrocketing. But yeah, now finally it's cooling down a bit. But like this is why it's pretty good. Like if you got like especially live in India and you understand like how this is so intertwined with your culture, you read price on gold and you can see like when it's most likely gonna become more expensive, when it makes more sense for you to like hurry up and do what you gotta do sooner. Because like right now, okay, it's fine, but the moment we start breaking above 51.25, prices only get more expensive. So you're just gonna be sit there waiting like for a discount, but you're never gonna get that discount. It'll just keep going up even higher and higher and higher, and then you just end up buying at a worse price. Like maybe like 5,600 plus. Because I believe once we get through this, once we're done with the inflation data today, then for the rest of the month here, we should be more or less in the clear. Russia memos sees return to dollar system and pitch to Trump. Russia memo sees return to dollar system. What's this? Whose memo? I stopped missing Biden. Everything was so chill back then. Who else thinks gold is stuck today? It's 17 hours ago. Yeah, it's stuck until news. The dollar has gained ground, whether physically or psychologically. It's impossible that the capital of the BRICS leaders is calculated in dollars. Rumor again. I don't need the dollar. They've been working without it for 4 years. Why would they go back to a currency that is based on debt and dying? I've never thought about it that way. It's true, like the dollar is it's based on war, a lot of war, a lot of mischievous activities. It's opposed to other countries, I suppose. But yeah, I don't know what to make of this. Russia memo sees return to dollar system. Russia wants what? I don't know. But what's happening with Russia, Ukraine? It's been pretty quiet over there. We haven't seen any headlines regarding that of late. Jewel demand has not recovered despite jewelers offering discounts on making charges. See, bullion dealers and jewelers have largely stayed away from purchases from banks, anticipating that the government will allocate around 80 metric tons of gold imports from the UAE at concessional duty this month, said Mumbai-based bullion dealer. Gold and silver shipments from the UAE attract lower import duties under the Comprehensive Economic Partner Agreement between the two countries. Yeah, most people who deal in physical gold live in the UAE. All these barons and these major people, they're all gonna be living there. Or UAE. In China, bullion traded at a discount of $8 or to premiums of up to $10 an ounce above the global benchmark. See, the year of the fire horse seasonally sees strong demand. Year of the fire horse? My sense is that the very elevated prices have dampened demand reasonably significantly, but it still remains positive on the mainland. Oh, this in China. It's gonna be the year of the fire horse. That's lit. The Lunar New Year in China and other Asian markets is traditionally seen as a strong period for physical gold demand. Well, it's time to get the wifey some gold. Gold ring. Given price volatility. All right. Yeah, chat. So right now we're just in a pullback phase here on the daily. We got resistance. We got a range of maybe like 877 pips towards that daily resistance. Right now, the intraday time frame is kind of choppy. Like some choppy conditions over there. But a 4 hour is looking clean. 4 hour candlesticks can start breaking above resistance. And you got this next range right over here. About 650 pips on the 4 hour time frame. You got clean traffic for price to keep moving up. I would say like predominantly like gold should still be bullish. I think like something that happened, the sell-off was based off the equities market last night. I'm not going to dig into that too much, but we are bullish on the daily, 1.27%. So I would actually expect more further upside, especially the way PA is looking right now. You got like this hourly clean traffic too. We just kind of got to get through that hourly level. It's a shame because, you know, we have this 4 hour zone. It's such a strong supply area that we just like completely distributed instead to the upside to break the highs. We distributed down bearish. And the whole idea for price to consolidate here was so that we could have broken out. But you see, so actually I think it did like a reversal play right here. If you see this is the accumulation right here. You see it broke above and then it consolidated again, little reversal play, and then started reversing on that position. See, like it tried to break out right here, and then it started to do its reversal right here, and then started breaking the reversal. The entry confirmation for the reversal right down here by this Wix 5044 is completely bled off at that point into New York session. So yeah, the moment it even did this and then started to do this, that was already a warning sign that it was not going to keep moving up, right? Just basic TFX concepts here, and then like, you know, it finally broke and then distributed. But I see on the first break it tried to wipe out some positions first. Right here, pulled up, tried to like wipe out some positions before it had its actual move, which is typical sometimes of markets, especially when it's about to do like a real bumperclot move. Sometimes it will be greedy and it will not want you to come in, and the only way you can come in is either if you timed it right in the first place or you just give your trade like a second chance. But yeah, I think right now we can look for a correction back up here on the hourly. So you see what hourly is like flirting with that resistance. So you actually got some potential buys. Let's start getting through those levels over there. I want to refine that a bit more. That's why I kind of been trickling up towards that level. Slowly but surely. It's such a big range. A lot of people are going to be looking at that range. It is definitely not discrete. Loads of people are going to be looking at that range. So we'll see if the first breakout, how it breaks out. Even on the first breakout, even if it fakes out, it should still give like a good amount of pips. That's just been the way gold's been behaving of late. Like, even if it fakes out, it still gives you pips. Remember, with my trading, I'm not trying to be right, Chad. Like, even if I do something like this, it's a big range. That's going to be the target. It's probably going to get filled, but how it gets filled, that's going to be up to the market. It like pushes first and then comes down and then tries to like trickle up. I'm not trying to be right to speculate on how it's going to fill that range. It just needed to move like, I would just needed to move like, you know, 6, 17, 20 pips. Some of the sorts, but it does have so much room there. I think it was like 620 or something. Yeah, 686. Does have so much room. Got about 33 minutes for this hourly here. It's being supported by the 8 SMA 2. On the daily, it almost looks like it's creating lower lows. Let's see. Yeah, on the daily it's created lower lows, but it's doing what it's doing right now on the intraday. You see this a little bit of structure, so notice this characteristic of how it's moving. If it does create new lower lows, it's still kind of moving up right now. It's the same thing that if you go on the 5-minute, you'll see that's the same characteristic, right? Of what price is doing on the daily. It's just a problem, I think, of volume or something. Oh, it's just waiting. It's just waiting. We had so many red folders this week. Yep. So it is just waiting. That's why it's moving like this. Time is it now? 3:30. 30 minutes into the New York, London session. Let's see, London open. Do we get any volume? It's setting up here. It's getting ready for a break. I think that would be the break that makes a run for 49.92. Gets above like 49.89 over here. Or maybe even earlier, 49.85. It's approaching that resistance. Getting a bit of selling pressure in though. You notice a lot of these pullbacks here on the 5-minute. Sellers keep pushing price. You pull all the way back up and then it pushes price. Candle here has about 6 seconds. Gonna close. It's not moving freely, that's for sure. It's moving with a lot of constraint. Sure, you can catch a trade, but you know, you kind of know the environment that you're trading in as well. I think it's quite important that you understand like how the difference between what a trading environment like this would potentially mean, as opposed to something that kind of was like more free flowing like this, which is a little bit more open spaced. It's the only way I can put it. So this, it's like it's still trying to break out. It would be nice if it did something, you know. Even if it comes down, the daily will still be trending. But as long as like it kind of opens up a little bit more, if you see that volume start to come back in, even if it like pulls down, and then you see that looks just a little bit better than this right here in the middle. Like danger here. Here it's clean PA, and this would be also clean PA. Can you check silver? Yep. That's the area that now it's just the market. This is all market right here. This is all the market trying to do its thing. It's like there's no market participants. You know, the way it moves like this. It's like, yeah, we could get some setups where the market's just moving to move. But it's created like a very clean structure here for a break above 49.85. Though maybe we're going to see some more market participants, some more conviction come in by 49.85, because of late, not so much conviction there. Looks like Nas is doing some small liquidity grab towards the lows, trying to break the highs, I suppose, by 24,683. Nice little grab too. Nas is down 0.30%, so it is predominantly bearish here on Nas. It loves these really quick reversals, but it did fill up the range anyway. Like it moved from here to here. There's a range that got filled up right to the mark by 65%. 5% of the range got filled. Now price coming back up to whip the greedy sellers. Gonna get a few whips over here now as price is moving up again. But filled up nice 65. Taking a buy would be a counter trend at this point. The daily is just coming down. It's completely melting. Even yesterday, got some really big dumps. I saw accumulation breakout, long wicks to breakthrough though, giving kind of shittier price entries if you're trading based off of this. Have to wait so much longer for that. But I eventually did break through. It kind of like got away from this zone on the 4-hour, and then that's just all distribution. So on the 4-hour, it's actually still distributing. It's about like 2 hours, 26 minutes for 4-hour candle to close as it heads down towards 24,342 over here. Broke below support. Clean traffic. 4-hour looks good. Hourly just still looks quite bearish as well. Almost like a head and shoulders here. Head and shoulders pattern, nice little SMA crossover. Price straight distributing. Like gold is also hesitating a bit here. You need to see some candlesticks on gold do this candle here and start to break above here, because once it does that, it's gonna try and make a run for 49.92 over there. But if it doesn't break those highs, but probably it's gonna break these lows. Break these lows by 49.76, and then potentially even see like a deeper pullback right over here below here. Either one of those things, or a liquidity grab below 49.76 to attempt to break the highs, because I believe the daily is still bullish overall. So that should be the ideal direction. Oh, you got the NAS buy. I don't trust this pair. You need NY to see a move, probably. But even now, it's just a move now. I feel like this is a characteristic of it. Like the way gold moves now during London, and it's... but anyway. Yeah, gold moves like this like throughout the day, I don't mind. Pre-London, pre-NY New York session. But if this is heavily based off of... I'm not sure. Just gotta watch it. Gotta watch it during that time as well. It's like, if it's directional, maybe it's quite nicer during New York session. It tries and follows the daily. Yeah, I got some really nice breakouts. Maybe that's the thing, yeah. It's more convinced during the NY. More volume to get you to where you need to go. It seems like the Londons here are kind of consolidating a bit on NAS. But obviously, you know, it's not always going to be the case. Also going to have those times where London performs quite nice. Big funny how you post something about funded programs, because I lost mine yesterday. Was up 3% on my 100k and I bought the dip. What happened? The dip kept dipping. You still needed to catch the dip of the dippity dip. Gold is really setting up over here. I feel like it's gonna finally have its first exuberant move, or first clean breakout here soon. Be nicer to see it happen to the upside though. There you go. You see volume starting to come in. Market participants are waking up. They're seeing the opportunity now. It's the variables are starting to become a little bit more clear. A lot of this is just random noise. It just needs to get through that resistance. I don't know why there's quite a lot of selling pressure here. They just need the buyers to step in and just really mop up this area. Push right above it. Very constrained PA today. On gold. See what silver's doing. Silver creating a support, similar pair, like in a sense like gold, but you know, silver has this really nice range that it's sitting in currently. It just needs to break through it. This is a break above $92.38 over here. I think this is going to be like next week. Like people are looking to get into silver. They're in the dip. I guess you could consider this a dip. This is like a dip over here. If that price come down, good thing is because you're not catching a falling knife. Like price has already started moving a bit sideways. So this is like the dip, right? And then what I would be expecting of silver into like next week would be candlesticks to do this. And then we're just gonna have a bullish week up ahead. Same thing like on gold spot. So that's currently what's setting up. It's a similar thing to what happened over here. Is currently setting up right here as well. So it's just waiting for those confirmations above resistance that silver can keep moving up bullish. Oh, 4 hour looks clean. Clean range on the 4 hour to move up. 1 hour is already in motion right now. That's what we're waiting on. Something like that similar on gold to happen on the hourly. Needs to break above that resistance. You're going to have that clean traffic. See right now, silver is on its way up here. Nicely with the London open. You see that pre-London close, and then with the London open, it's facilitating the volume towards the upside. Currently in a breakout 2. Breaking out from this area here. So I accumulated some orders. Now it's in a distribution phase on the HTF. 1 minute here is it's trying to cook up for a continuation 2. Small little accumulation, manipulation, distribution. From here, the manipulation. It's trying to cook up a continuation to the upside because it's currently in momentum. It's directional, you know. It's like pushing. It's pushing directionally with a good amount of volume, as you can see on the 5 minute here. Stretched out pretty nice, like good pizza dough. And on the 5 minute, it's still, this is the inception for, I guess, for gold to when it can start moving a little bit more clear. If it can start breaking above this area here, maybe we're gonna get a little bit more clear PA. Clear direction, although the daily is trending. See, gold rebounds ahead of US inflation data. Gold recovered part of its recent losses as dip buyers returned ahead of key US inflation data. The earlier decline coincided with broader market jitters and was likely amplified by margin calls, algorithmic trading, and profit taking. Because it wasn't like a macro event that happened, right? So that's kind of what it looked like to me. It just didn't make sense. It had to be something. But you see, there was no macro event that happened. So it's most likely it was triggered by, as they say over here, margin calls, algorithmic trading, and profit taking. A little risk off. This whole week has been risk off on gold. But still, nonetheless, pretty good week. For the HTF, very much risk off. This was Wednesday, all in order flow. Confluence actually took it before because there was another entry confirmation. But with TFX, you get many Ws, and in this market, possibly 1 minute plays. See, 5,000 is important. Oh yeah, we got 5,000 here. So if it actually distributes from this area, that's going to be the target, 5,000. If it starts distributing properly, we're gonna see price heading towards 5k. It will need to get through that hourly resistance, but I think that 5k mark is definitely a target for the buyers, and that's what they're conspiring to do right now over here. They're just waiting for their attack. Waiting to see when the sellers are gonna be defenses are gonna be weak. And then they're gonna make their move. They're gonna attempt to make their move. Because the sellers right now would be trying to protect overall 5k, but they'll want to protect this initial area right over here. You know, the buyers, they know this, so they're kind of moving cautiously. Gotta create the right structure that's needed to get through it. Because the sellers know, like, if the buyers take over this initial breakout, it will be a lot easier for them to come much closer to 5k. But I think the market does want to go up there, though. I think at the end of the day, there's no real reasons as to why we shouldn't really move up on gold. Plus, we're stuck in a range anyway. We just pulled down. We got a clean traffic on the daily to still keep moving up over there. I'm like 847 pips, so we're well within the range that price can correct this move. Yeah, so now just like watching. What's the next move gonna be? See, no confirmations. This is all just constrained PA. Volume coming at a 1 a.m. past. And the 4 hours has no bottom wick. Alright, no bottom wick. I got a bottom wick here. What are you talking about? We got a big bottom wick on the 4 hour on gold. Maybe check your broker. Honestly, Goldie make a run for it. I think they just did a small liquidity grab. The buyers just did a small little liquidity grab over here. Gonna see how it reacts as it breaks above these highs. I think they're making their move now. They just did a tiny liquidity grab. It's like a needle in a haystack. Here come the sellers. They try to quickly liquidity grab and make a run for it. Now sellers are panicking. Yeah, they're breaking now. They're breaking now. Maybe they trapped some sellers over here. They're making their move. And making their move. The risk is on right now. Buyers are in. Their risk is on. This is either gonna be for them make or break here at this point. It's a bit of an earlier entry, but let's see. Boom, boom. It's a bit of an earlier entry. Then there's gonna be another. There's gonna be more reinforcements above 49.89 over there. It's like the seller's trying to push heavily. See that rejection right here? It's constrained. Overall, it's constrained. The PA is constrained. It's not going to be moving quite flowy. This is just the initial phases of when the breakouts may be coming in. Yeah, see trap. You see that aggressive move? It trapped some buyers over here. trap some buyers still in this overall wiki environment. It's quite interesting, actually. Just reading price like that, it's actually quite interesting. You really dig into the psychology of like when something is, you know, when something interesting is gonna happen. You see this? It's not random. It's not random. These are very high. This is kind of like high value areas right over here. So you see, so that for in this scenario, the sellers are still feeling a lot more confident, and there's not a lot of buyer confidence. Even though the buyers attempted to do it, you see that's what they got, like their own version of that mini liquidity grab here. They attempted to do it. They tried to get through it, but looks like the sellers are still in control in a sense. It's also what's making it quite difficult for the buyers to move up, as you can see. It's just a battle between buyers and sellers, correct? That's why it's trickling up like this. So that kind of PA kind of give you like a hint of what to expect from the market. This should be a fake short move to grab more liquidity, but I'm not trusting the volume. Low volume. It's until we see like some opening up of price. Right now, it's still, you see, maybe we get them opening up here so it can break away from this general PA. Because as we start to, okay, distribute like heavily. Wow, what an aggressive push. When it distributes heavily, it's going to break away from this PA. From this PA, then it's going to start setting up again. Play like some cleaner moves. Some much more cleaner positions. But it's kind of funny, like honestly, like reading it like that, it's like a game, right? It's like one of those war games, basically, where they're trying to like make their plays. Again, like we'll watch the plays which play out, watch the plays which don't play out. Oh wow, look at this fat pullbacks again happening. See, we told Terry is right. We're gonna get that to grab more liquidity. Yeah, but not trusting the volume. It's that understanding that's quite important in markets. It's also kind of knowing like when not to trade, or you know, kind of getting okay with just watching the PA and stuff like that. You know, the reason why I'm not like so pro prop firms is because like when you're on a prop firm, you're worrying too much about unnecessary things that don't exist in the real world, like all these rules that they place for you. Whereas you should just be focused on just trading your account. Trading your account, learning how to trade the markets, how to be consistent in the markets. That's what you should be focused on. But you see, when you're on a prop firm, first of all, you're too excited. You know, you're always too excited. The fact now you paid for this prop firm and, oh, you know, you have a potential of making all these payouts because that's what you're seeing on social media. You're way too excited. So you need to calm down. You know, it's not the environment for you to learn how to trade. That's an environment. The whole idea behind a prop firm is for you to use the skills that you have gained to build your personal account. It's not for you to learn how to trade on, because now your mindset is focused on unnecessary things, on not blowing the prop firm, on following their rules and all of these things. It's not helping you be disciplined because those rules don't exist in the real world. Those are companies. A company just created this thing for you and they created rules. It doesn't exist, man. If you're on a broker, you can trade like anything pretty much that you like. Trading is open. You should be able to trade anything. You know, there's no such rules like this. So you must follow the skills, the real core skills. You must learn how to master those skills. And then now we can talk about these other options over there. And if you need a prop firm for you to be disciplined, then that just means you're weak. You're weak and you should not be an entrepreneur and should go work a 9-to-5 job. Because you know, what kind of a leader needs some kind of like clutches for them to be disciplined? You're not a true leader, my friend, and you should just go work a 9-to-5. Because when you're a trader, you're an entrepreneur. You're your own boss. You're the leader, right? No one's going to tell you nothing. If you want to trade, you're going to trade. If you don't want to trade, you're not going to trade. You know, you're the CEO as a trader. So what kind of a CEO needs clutches? Would you want to work for a company where your CEO needs clutches? Do you trust a guy like that? Maybe your CEO has a, you know, it's like a pilot. It's like a pilot who has a drinking problem, you know, and then you put that pilot around alcohol, right? Sure, you have these regulations. The airlines have regulations and rules pilots should follow, but we gotta trust a pilot with a drinking problem, and then, you know, it might get tempted. You don't feel too comfortable having that guy lead the fly the plane, correct? So that's like your psychology. You're like an alcoholic pilot who is just trying to keep his shit together and hopefully doesn't drink on the job. That's what it is. But you see, now you're just masking the problem. You're not attacking it directly. So this means you have a discipline problem. It's not that you have an account problem, that you have too little money to trade. You have a discipline problem. So you gotta work on that. Don't be like Denzel Washington in Flight. Gonna crash that plane, sir. And the worst part is that it's not real trading, right? It's not normal for accounts to be blown in trading. Usually an account should be nurtured like a business. You know, you gotta nurture a business. You gotta see it grow properly. It's not normal just to be blowing and trying and blowing and trying and blowing and trying. It's an old school way of doing things. This new school way is just for the weak people, you know. The new generation is a lot softer as well than it was back in the days. Especially like comedy and, you know, a lot of things that got away back in the days. You can't get away with that today because everyone's getting a bit soft. Even if you look at cartoons, now cartoons have got like the soft edges. Like everything has just become soft. Because people are lacking like character development over there. So that's the way I look at prop firms in this day and age. Before, when I was still learning to trade, man, like people were using prop firms as a way to supplement income when they first got the skill. Nowadays, it's just like a scapegoat to hopefully get a payout while still learning. But just focus on the skill. You know, if you're going to have a passion for something, you're going to go a lot further than the guy who does not. Right? You're going to walk a lot further because I've seen people with like very little passion like this who come and they never make it and they don't last very long. Because first of all, it's a very trying environment. And if you don't have the passion and patience to actually learn the craft itself, you're never going to make it. It's like Gordon Ramsay, when Gordon Ramsay told a story about like how he grew up in all these kitchens and how he was learning in kitchens in France and in the UK. Man, Gordon Ramsay went through so much shit, you know, so much abuse. And he had his own family issues with his father being an alcoholic and all of these things. Man, if Gordon Ramsay did not have passion for food, he would have never made it. So you're basically the guy in the kitchen who's never going to make it because you're too focused on the wrong things. You know, you're too focused on prop firms and not the actual skill. You got to focus on the skill, the foundation of everything. That's what pays you. Professional NBA players don't become NBA players by always just focusing on the NBA. They first have to love the craft, right? They have to practice that craft every day without even seeing the result. You're too result orientated when you're on a prop firm. It does not allow you to think properly. And you haven't developed the character to even be on a prop firm. It's just the same way as an NBA player still needs to develop the character to be in the NBA. If you just put anybody in there, just, you know, you pay a fee and you just put yourself in the NBA, you don't have the mental fortitude to play at those levels yet. So you haven't earned it. And the universe is going to know this. And I'm going to bust your bubbles here today. So if you want to go watch a stream that they're trading prop firms, be my guest. But you will be here, I guarantee you, next year, just trying to... Because, you know, when your mental is on a prop firm, you're just thinking survival, not trying to blow the opportunity. Instead of thinking, I want to pay less tuition fees as much as possible to learn the craft. And you have a lot more control over a lot more other things too, to survive. It's an old school way, but you know, old is gold, chat. Old is gold. That's why I still try and make an effort to always look at you know, just the things that worked before in the past, and those things that can continue to work today. Because you don't have to reinvent the wheel, right? Like, you just have to focus on what's been working and then keep doing that. I find your voice relaxing. Do you do any audiobooks? No, sir. This stream is an audiobook. Yeah, this is so choppy over here. 5-minute liquidity grabs towards the lows. Also, from I've reduced gold leverage to 1 to 10 or 1 to 15, so it's difficult to scalp. Imagine. Can you imagine? It's hard enough you're trying to learn a skill that most people fail in. Now they've added a blanket of rules to make it even more difficult. Are you looking for buy or sell? I'm waiting for price to break out. Like, price needs to have a movement. It needs to break into the highs or lows. Like, it needs to go somewhere. You see, it's like, it's very constrained, man. Like, look at this. It's even doing liquidity grabs now. And we've been just watching this PA since here. This is what we've been talking about. That's why we said, you know, look at this. It's Friday. Relax. Don't overtrade. Because even right now, the condition, see how it's like so tight to each other. So we haven't yet broken away from that PA. It's still within that same zone. We thought we were going to get the initial break here. Well, it started breaking above 49.86, but it looks like it quickly faked out. You see, because it knows like buyers are still are waiting for the breakout. So as soon as it broke, it quickly faked them out right over here, the liquidity grab. But at the same time, what's interesting, it like pulled up and it still respected the integrity of the structure here. So this whole zone is still valid. It's still valid for a move. So I think for the buyers, they're trying to actually break away from this general area and start creating PA. Like a really nice tradable PA. Right now, it's like, yeah, you can try your luck. But just don't be surprised, you know. Just don't be surprised because of the way price is acting right now. That's all I'm going to say. It's a different situation than like when price is moving quite nicely and flowing better. And if you take a losing trade, then you're like, okay, you can be a little bit surprised. But right now, if you take a losing trade, don't be surprised. You could just be trying your luck. Maybe you catch the actual move out of this zone. But it's definitely not the safest PA to be trading. BE on 78 now, ready to become slip. This clean doesn't come from theory, but daily struggle. There's another side to prop debate. It's leverage at a pretty low cost if you can master the rules. Yeah, that's the thing. If you're already a good trader, then yeah, perfect. At least the option is there, right? But most people are learning on the prop firms. That's the problem. It's like you're learning how to play basketball in the NBA. You're not gonna make it, right? It's too much pressure. Because if Eisen was to be learning, you say saving capital, but now I'm learning on a prop. If you even got like 500 bucks, get a broker with at least 1 to 500 leverage, or even like 1 to 200, 1 to 500. Like that's still perfect, you know, because even if you didn't have money, like just imagine a kid who doesn't have any money. Let's just say, for example, a 13-year-old doesn't have any savings, doesn't have anything, but he can come into the charts, he can paper trade, and he could trade it like a real account, but obviously it's going to be on a demo, but he's still getting the same results like on a demo account. If he has like a month of profitability, 2 months, 3 months, the only thing that kid is missing at that point is just capital, but he's already got the skill. The real value, the real golden nugget is in the, it's in the raw data, it's in the raw talent, the skill. Everything else is just like additional, right? Like if you see how music companies find raw talent, find somebody who sings really good, that's a raw talent, then everything else is just marketing. And it just helps push their already raw talent to an elevated level. But I think it's just that gold nugget that you need to work on. Everything else after that is like kind of easier. It will just come naturally. But yeah, it's not something a lot of people want to hear because it sounds like a lot of work to first prove to yourself that you're profitable. It would be much rather interesting to almost get lucky, get a payout. But you see, the thing with motivation, it quickly dies out, especially when you start making money as well consistently. Motivation to keep making money will die out. So you need to be the person who is already disciplined enough to keep going. It's the same reason like how the people you look up to, they don't need to do what they do, but they still do it, right? Like Elon Musk, for example, he doesn't need to work anymore. He could just relax his whole life, but he still works. Like if you look at successful people, they're just not on a beach somewhere chilling. They're always working because even to get to that point demanded a part of themselves to die. And it just made them into that character that they just keep going. Because, you know, like that's the kind of person that you kind of need to be. So don't focus on just the result and the motivation of money, you know, because that's also going to die out. But you know, as you get older, it's harder for you to also see and understand that. I feel like when you're much younger, you enjoy the things you do a lot more, right? Like if you see a lot of like these artists and successful people, like when they're younger, they enjoyed it like a lot more, but when they got older, it felt a bit more of like work. But if you just keep pushing, then it starts to feel again somewhat enjoyable. But there's always a point you get to where it does just feel like work. But if you keep going, it starts to get enjoyable again. It's kind of hard to explain. But it's different. You know, when you're much younger, you do these things on a daily basis without even thinking about it. And you just freaking enjoy it. It's much easier for you. That's why I think trading should be taught to people at a younger age. So, man, you see like Eisen, I think Eisen is like, how old are you? Like 14 years old, something like that, 15, I don't know. But you see, start like at an earlier age, you freaking enjoy the process. You're more prone to enjoying the process. So there's a lot of psychological things at play here. You know, trading is a very psychological thing. So not only on the charts, but you must also assess yourself, do an audit of your own psychological thinking of where you are currently at in your life. That's why they say also like don't rely on trading because you're gonna make the worst decisions, right? If you rely on it right now to pay certain bills in the market, from the market, you're gonna make the wrong moves. But if you treat it like kind of like a hobby, you're trying to get better at this thing that can potentially also change your life, then I think that's the approach you want to take. You know, take it seriously, but don't Don't make it seem like that's the end of the world if you're not profitable in the next 3 months, for example. You know, just take it slow, just enjoy the process, and just what do you call it? Submit to the market and its teachings. Sometimes you just got to do that, right? Because the market's a master right here. So you see right now the market, what is teaching you is teaching you patience. So you have to submit to that lesson for the day. Correct? It's every day is going to be a different lesson. Today's teaching you patience. It's trying to test you to know if you know the difference between when to trade and when not to trade. Because it's very tempting. I mean, you're going to see a setup. It's going to be very tempting to take it, but your gut feeling, that intuition deep down inside that the market is trying to train, it knows that it shouldn't be trading. You know that you shouldn't be trading like any market, not just gold, but any market condition like that's chopping up like this, because you've seen the difference between certain days, correct? Like you should have already some kind of a sample size of different market conditions. So you know this right here is usually that type of market that you lose money. But most people will still try and attempt to trade it. So if you can just avoid that, man, I think, you know, that's going to be the lesson for the day. Because every day, you know, if you have 24 hours, every day, you can't even mess up once. You can't allow yourself to mess up once. Because if you mess up once, this is how I always used to think. Like when I was waiting for candlesticks to close, if I was to mess the trade and let's say I got in too early and then I quickly close it, even if I close it at a break even, that's a loss for the day. You have to wait another 24 hours to really build that discipline that if you're saying you're going to wait for a candle to close, that you're going to wait for the candle to close. It doesn't work like you're going to take it and then quickly get out because it didn't play out the way you want to play out. Now that's going back to hopeful trading. So you're just kind of hoping to get away with it quickly, but yeah, I think that's not good. See, that's why it takes time, you know. Same way as like, you know, when you trade a real account, if you blow it, you blow it. There's no redos. The market will know the difference, right? So even if I'm up right now 37% on the month, if I take some dumb trades right now and give it all back, there's nothing, like there's no insurance the market's gonna give me. It will just take all my gains like it never happened. That's how unforgiving the space is when you lose discipline. That's why a lot of great traders, not only just retail, but people even in hedge funds and banks, they all experience the humbleness that the market can provide real quick. Doesn't matter who you are. Even look at the guy from FTX, Sam Bankman-Fried. You know, eventually the market caught up to Sam Bankman-Fried. What he was doing was working for a short term, but when the market shifted, it shifted and it humbled him. And you know, Sam Bankman-Fried was also the type of guy, or at least his girlfriend, which was part of the risk management team at FTX, said stop losses are not a good tool for risk management. Now look at where they are. Humbled. And you can see these things. You can see these things on the horizon. If you know that what habits are being performed, you will know what to expect on the horizon. Correct? Like there was this one guy who always used to trade like this and like this. And he used to like win a lot, yeah? He used to win a lot of trades, and you know, sometimes I make fun of him, just like banter. But like that was delusional to think you're gonna get away with this. And a lot of his community used to say like, oh, how does he keep getting away with this? But I used to say like, guys, this is gonna catch up to you. It doesn't matter like if you're winning like every day for a month, 2 months, market will catch up to you. And eventually it did catch up, and it was quite a detrimental thing to the man's career when it did catch up. It didn't matter if he was winning for a whole year. He could have won for like a whole year. He could have made $1 million, $2 million. Doesn't matter. It will catch up to you. That's the thing about the market. It rebalances everything in the end. So you don't really get away with anything. You're either gonna have like a discipline and a good rules, good mindset, or you're not. Right? So you got to see what are those things that you're doing right now that you even know deep down inside it's going to catch up to you. What is that thing that you're doing currently right now? Is it like over trading when it's not necessary? whatever that is, it's gonna catch up to you. You know, because you're running a business. So imagine now a business which is doing criminal activity, but they're getting away with it, right? But they know that there's something that that business is doing. Eventually, it's gonna catch up to it, and could be the detriment of the business. So you kind of gotta look at it in that sense as well. So it's kind of like if you got a business, for example, just a random example, and somebody's stealing from the business, and you're just letting it kind of slide because it's not a lot right now, it will only snowball into something bigger. So you have to deal with that problem immediately and not ignore it. That's the kind of work that you have to put into your trading. And you know, sometimes you're going to find out that trading is mostly about also knowing when not to trade rather than knowing when to trade. Because people are too focused on when to trade, when's the next buy, when's the next sell. How about learning how not to trade? Because not every day is going to give you an opportunity, and not every day is going to look as a nice to trade. So if you could tell the difference, I think, you know, that's going to be really nice. But you see, for the whole week, price on the HTF hasn't been moving anywhere, but the LTF has actually been quite decent this whole week. It's only like Friday towards the end of the week we're starting to get a little bit more choppiness. But even on the days we didn't trade, we just called out a few trades and price was moving like quite nice. But eventually, a day out of the week has to start chopping up. And it's usually on days like this that people overtrade and give back gains from the week. They're gonna ruin it. That's what they say. You're ruining it. Stop ruining it. Read my lips. You're ruining it. Oh, better take that off. People will take it. Yes. People are gonna take it. They're gonna take. Now we just gotta see this area here broken away from. It's like very, very compressed. Got some compressed air over here. Is it because of the newsletter? Yeah, it could be. We got inflation data. It's really, really important. Beyond that inflation data, I think we should be back to business as usual on the daily. Now we'll just be waiting for catalysts. And we got a weekend up ahead of us. You know, this weekend, we could have some news this weekend. We've been having like a lot of news over the weekends. So maybe Trump is going to say something. And we're going to see markets move on Monday again. Maybe there's going to be an escalation with Iran, or Trump is going to say something. I'm thinking of starting a 5K real account, or should I wait for bigger capital? Start with $500. Because you know what all that it means when you're learning on a 5K account, it just means you're going to pay higher tuition fees because you're going to have bigger lot sizes. So you're still learning, and those losses that you're going to take are just going to cost you more, unnecessarily more. So this is something that I was able to see at an earlier stage, because I was able to find the right mentors at an earlier stage. So the mentors I was following were very concentrated on risk management. So I paid a lot less tuition fees than a lot of people would. Like my worst days maybe started like $5, $10, $20. Really not that bad. But if I started on a 5K account, man, that would have been, you know, a lot more than that. You know, and it's an unnecessary expense because you will have to pay the tuition fees. There's no doubt about that. Everybody pays tuition fees in any craft that they go into. It's like, you know, it's like, let's say you're a skateboarder and you're gonna learn how to jump over stairs. You gotta start with a 3-step, then you know you gradually go 5-step. If you start with a 10-step staircase, man, that tuition fees you're gonna pay is gonna be a lot more painful. You're gonna break an arm, you're gonna sprain a leg real bad. But it's different if you first start with the lower stairs and then get more comfortable with the higher stairs, correct? It's the same way as anything else in life. Like trading will literally mirror everything else that that you're gonna approach in life like that. So that's my advice. Like, just take it slow and just stay on your lane. Don't compare yourself to people who've been doing it for a long time and think that you know. Don't think that you know what I'm doing here. For example, if you've only been watching for like a month, maybe 2 months, don't think that you completely know what I'm doing here, you know, because I've been trading here for, I'm going to my 6th year of trading right now. It looks simple, but it's not that simple. There's a lot of discipline that comes with it. And yeah, things take time. So start slow. You're 16. You got so much time ahead of you, sir. But yeah, that doesn't mean you should get too comfortable, right? Like Future says, bitch, don't get too comfortable. Never get too comfortable. But yeah, he's starting at an early age. I think it's pretty nice. That's part of the AI debate. What will people do if they have universal basic income? Where is your purpose, drive, motivation, reason to live? Stop working and you die slowly. That's why Elon Musk says standard universal income. Even if you have 50-50 trades, you're still profitable. Or positive expectancy system, or like a good risk reward. It will depend. Your risk reward also will depend on how consistent, how your entries look. Yeah, risk to reward is, I don't know if it's a good metric. I think it's just a beginning metric to start looking at. When we all start trading, what we hear is risk to reward, right? We kind of just regurgitate these things that we hear as novice traders. Like risk to reward has always been the most simplified way to explain risk and reward to a novice trader. So I think it's a good way to start, but I think you should elevate your mindset a bit towards that risk reward thing. Maybe even start looking at percentage gains instead of risk to reward. Maybe start looking at risk a bit differently. Because, you know, like if you think about the world economic system, if you're going to look at a institution like Goldman Sachs, wouldn't it be kind of weird for them to look at things like in terms of risk reward like this? Wouldn't that be kind of concerning? With the amount of technology and access to information that they have, it's a bit watered down, isn't it? So, you know, risk looks slightly differently as you elevate your understanding of markets. Correct? It doesn't have to, okay, it can be like this. You can water it down to something like this, but also just because you have a stop loss here, for example, doesn't also mean that you have to let it hit. Right? There's certain ways that you can adapt to current market conditions to reduce that risk. So that's always remaining fluid. Like the probability of your trade, like once you get stuck in, you gotta think about like as numbers just constantly moving. That probability is always shifting, right? So that's why for me, if price moves up a certain amount, I like to put my stop loss to break even. Right? Even though I still think it should go up towards a certain level, I will still secure at a certain amount and put my stop loss at break even at a certain amount. Because it's always shifting, right? We say every moment in the market is unique based off of what unfolds. So that's a much more elevated way of thinking about markets. But when you start with risk to reward, I think it's a good way to just get your feet wet. You know, it's a good way to get you into the habit of taking trades, executing, waiting, watching it play out, just to get the feeling of trading. But you're gonna always get better. But hey, if it works for you, then awesome. Like some people use it like as simple as that, and they say it works for them, and I think, you know, it's pretty nice as well. Just as long as they kind of know what they're doing and how far in terms of knowledge that they want to acquire and what their goals are and all of these things. For me, I've always tried to elevate. Some people are more comfortable with drawing a trend line like this, for example, and then doing that and then not touching the trade at all. Do this and then just wait for it to hit. which is also okay if you see your trades and your data says that something is playing out most of the time and it's your psychology that's messing the trade up, then yeah, maybe, you know, it's best that you don't do anything then at that point, because everybody's got like a different kind of journey. But you see, for me, when I started learning to trade, I always was looking at risk as something that was variable. So that was my education in from the get-go. It was never to let the stops hit, was to look at risk as something that's variable, that you can change. It's the same way, like, I always like the analogy of freaking card counting on blackjack. It's also a variable that changes, you know. And when you get good at understanding markets in terms of variables like that, your mindset is already molded in a way that you're able to take advantage of different conditions. Like if market is trending heavily, that's a variable you can easily spot and then leverage off of. Hold your trades a bit longer, maybe use a bigger lot size, because now you're a bit more fluid with the market. And you get a lot more understanding as well. That's why I say it's not for everybody. Like, not everybody wants to do that part. That's... I have to make my last 1% day on consistency profit. I'm on 0.8%. Making 0.2% is frustrating you now. Just right at the finish line, man. Right at the finish line. Don't think about it. Don't think about it. Just keep running. Imagine a marathon runner running for so long now, right at the finish line, he can see it's there, then he starts to overthink the finish line. You know, it's the worst. Then you start to give yourself like these kind of problems. You start to feel a lot more tired or something happens. It's like when you're bench pressing and you're thinking about the bench press that you want to get to a certain number or something of the sort. It gets even harder to get to that number because you put so much weight on it. So don't think about it. Just keep running that race. Just keep focusing on that. And then when it's over and everybody's cheering, you're gonna look around and say, "What's going on here? I'm just focused on the process." But this is nice. This is nice. Everybody's cheering. You know, people who break records don't even know how they broke records. Sometimes they look back at their records and wonder, like, how did I even do that? You know, it's because the mental was in a completely different stage, though, focused completely on the craft. Where you from, Vic? Wakanda. Vic, if GJ touch resistance, is it good short on 1 hour? Let's see. Oh, my trading view just lag. You should, Eisen, you should check this guy out. This guy is from the Trading Nut. This was 5 years ago though. But this was the youngest kid that I ever saw. He was like 15 years old. 15-year-old forex trader, reads charts like a pro. I think, what was he trading? Golden Zone retracements. It's a much older video over here. This is the youngest trader that I ever saw. Wow, this video has 4.3 million views. Holy. 4.3 million. Trading Nut. 15-year-old forex trader. Fibonacci strategy. But let's see here on the hourly. Yeah, I got hourly resistance. I think you want to see like price get through that resistance for price to continue to move up bullish. You have this range. It's 60 pips. 60 pip range if price can break above resistance over here. So let's see, let's refine that on the 30 minute. It's 30 minutes nicely lining up, 15 minutes nicely lining up as well with the structure right here. It's 5 minute as well. Situation like this, it's not a trade I would typically like because these ranges are so far back. It's like a higher time frame play. I think anywhere from the 30 to 1 hour. Though the 1 hour looks a lot cleaner. So ideally, I guess what you'd want to see is price to move up like this and then create a support. So you want to get a kind of a confirmation whether that's going to come below here or even above. But you want to see some kind of a support to be formed, a candlestick to close, and the next candle to break the previous highs. Now that's going to support the idea that price here can continue to move up bullish. But you need some kind of a candlestick closure above this level. Preferably with some structure, because this is currently parabolic on GJ, meaning that it's just moving straight to that level. And it's correcting this range. You see, it's essentially what it is that you're trying to do is what happened here previously. See like how candlestick on the hourly just broke above, and then it's trading within this range, and these are like the breadcrumbs of where it's heading to next. So you see in this situation, broke above, created a support, what I was talking about right here. Created a support, broke above, next candle broke the highs, and it continued to fill the range. That's essentially kind of the situation you want to see like happen here for pound yen to keep moving up bullish. And right now it is up 0.64%, so it is trending more towards the upside too. Yeah, gold's just melting. Gold just broke support. But you see, it needs to get away from that area, so that's good. That's good. You see, it broke the low, right? It broke the wick low. This is that range. This is that ultimate range that it's in. We have a resistance right here. Wick high, wick low. That's our overall range. So you see now it's breaking through it and the volume is starting to come in. I think even the entry came in a bit sooner. There was another one like right here. But also this one was okay, I guess. Break of the lows. Boom. It's currently in that distribution phase. Because it needs to move. Because then trading activity just it's like trading activity will completely die out if markets just arrange like that, because that's no longer appetizing for anybody to get involved, right? But once it finally breaks out, it creates a little bit more of a fresh market condition that we can start to get more market participants in. Because we all know, like, markets, despite what systems we trade, we all understand what this is. We all understand this is just not the most optimal condition. So it breaks out, and now I think it's going to set up again. But Goldie should be on its way up today. That's what I think. We got through. Resistance here on the 4 hour. One hour looks a lot cleaner. Potential buys, potential buy target. Chill, it's Friday. Freaky Friday. It's just a pullback. Relax, we're going to rock it. We're playing a range. We got support down here, and it is 530 pip range. This is probably the zones we're gonna hold up until core CPI today. Potential 70 pips here if candle closes in like 3 minutes. This is closed bearish. Oh, 30 minutes still got some room to move down, but the lower time frames look a little bit more sketchy. There's like 15-minute support over here. You got like 5-minute support areas. Only thing that looks good is the 30 minutes. So if you're gonna take a trade based off a 30-minute, then it could be like a market fade entry. It creates like a support. Then the next candle breaks these lows to continue to move down. But yeah, at that point, you know, your trade is gonna be based off the 30-minute. So you wouldn't pay much attention, I guess, to the lower time frames. Although you know that that's gonna create like some speed bumps for price to continue to move down. That's why when you're going to trade like a breakout system, you don't really pay too much attention to the support resistance levels, because the idea is that we're meant to get through those levels anyway. Like we're supposed to break out and keep moving through those zones. But if there's clean traffic, then yeah, obviously it makes the trade a lot much more better. See, like GJ here is starting to accumulate. It's accumulating right below 209 430. It's building that foundation that it needs to start breaking above. I already had such a big move down. I think people would be more expecting a retracement on this, but you gotta wait and see here. In 15 minutes, off the 15-minute candle is gonna close. Be interesting to see if there's gonna be like a fake out here on the 15 to start moving up like this. Then that will distribute what's there on the 1-minute time frame. Is try to see some volume to come back in to keep pushing above. But it feels like GJ is kind of like it's had its move, it's filled the range, and now it's just kind of like gotta recalibrate, right? Because it's already moved from point A to point B. Whereas gold is setting up a potential point A right now. On like a 1-minute time frame. 1 minute still not looking too clean. But definitely at a point A, and that's gonna be the area here. Remember, the daily still up 0.94%. So we're definitely still overall bullish. I think that this is just a drop because I don't think we're gonna go anywhere until like core CPI. It's probably gonna respect the hourly resistance right over here. Alright, 5 minutes just close, created a bit of resistance. See, it's still not appetizing for price to come down. I personally love the 5 minute. Like the 5-minute time frame for me is like the best time frame. It shows if you got like nice candles, it shows such smooth PA that we can get through. But But if you have to go on the higher time frame, then I think it works really good if you're executing on, let's say, the 1 minute and just expecting a runner based off HTF clean traffic. So sometimes that works quite nicely. So if you're like looking for a sell over here, you would expect the 30 minute to fill this range, about like 150 pips. Right? But if you start going on the 5 minute, 15 minute, you're not going to have that much freedom for the trade to move down. So just an additional variable, like additional speed bumps for the trade. That's why I think like the path of least resistance for price right now is like if it breaks about 49.69 and then to continue to move up towards our next point, that's going to be the path of least resistance for price. Whereas you see like the same thing on GJ, it's the same exact thing I'm explaining on GJ, path of least resistance. And you see how beautifully that moved? But now it's got to set up again, right? It's got to set up again because that's the target right there. It's gonna be like this trade in a sense, where price just moves straight up towards that resistance and then bounce off that resistance. And then it came down. It's a nice little point A to point B. At least the market is somewhat broken away from this area over there. And it should be somewhat opening up. Overall, still very constrained, right? So if we break down PA, what we've gotten since the London Open, at least, so let's get the kill zones in. You see this whole section right here is all compressed price action, consolidating. And then only 10% of that was that distribution, right? That's the only move that actually moved somewhere interesting. Now it's kind of doing the same thing again, but it's setting up. Potentially setting up here. Candle's going to close in about 2 minutes, 27 seconds. The 1 minute still doesn't look like it's formed the structure yet. Maybe get like a bearish candle closure and then a rebreak of the highs. It would just give a better probability than anything that was happening over here. Because this was all choppiness, whereas this is starting to have a little bit of volume come back in. But still overall today for Freaky Friday, that's been the case that price has just not opened beautifully yet. I might even mop up the range without giving a confirmation. Got 1 minute 30 seconds. It's already pushing up through that range. Gonna battle with this ADA SMA now. Walk me through how you're seeing daily bullish after that melt yesterday plus strong NFP. What structure are you leaning on? Oh, I'm leaning on the daily structure. I'm not leaning on what previously happened here. I understand that's one way to break down the HTF. Most people are going to break it down based off of like all the structure here, potentially creating lower lows. Some people might see that as a potential lower low over here. But since, you know, I'm a day trader, I just focus on the daily candlestick. Right, so if there's more volume or pressure towards the upside, then my daily bias is bullish. It has nothing to do with this because this is a higher time frame analysis. Maybe if now you're trading on a higher time frame, you can use this somewhat analysis over here. But since we're trading on intraday time frames, then this is enough. If price is moving up, you know, just ask yourself like who's more in control today, because you're trading today, right? Maybe you're gonna have a tight stop loss, 20 pips, 30 pips. Even 50 pips still quite tight. You're trading today, so majority of market participants today are buying gold as far as we're concerned. Gold is up right now. If you're at a forex bureau and they're showing you the gold, you're gonna see gold on the screen. It's gonna say gold is up 1%. So people are buying gold currently here. So I would say there's a higher probability that if you're even looking for a running trade, that it's going to be a bullish running trade as of now, because it's still early out. It's still early on in the day. You know, we're just in the London session, but as the day unfolds and we get closer and closer to New York Open, that's a different story, because if we're not increasing in percent, there's a chance that gold can roll over. But early in the day, like, you know, early birds, we're going to trade with the wind. So if we're moving up, there's a higher probability for us to keep going up. But as the day unfolds, also the market variables are going to unfold. And then the market can also shift. You know, the tides, just like in the ocean, in the morning, the tides behave a certain way. And in the evening, the tides behave a certain way. So for right now, definitely still daily bias bullish, as we're up 1%. It's very, very, very simple. You can download the free TFX daily bias indicator here. So it's going to tell you when the market is bullish, waiting, or bearish. Like on GJ, we're still bullish over here. But I know you can make a case for all of this that happened over here. But you see, this is higher time frame. At least for TFX concepts, it's not really important to making money right now, because the market is reacting based off of what's currently happening. What previously happened, like especially in a much later time frame, is not as important. See, like right now, I see price currently breaking above this resistance, but ooh, trading view is lagging here today. Why are we lagging so much? Yeah, right now what's currently happening is price is trying to fill this range. It came down. It barcoded here and it's trying to fill this range. It's literally peanuts. Like that's kind of what's left over here on gold. Like the ranges are not as wide. And you see it like also pushed quite heavily, but the idea was for price to fill this range. Is coming up with about 65%. Because it opened up, right? It opened up. You know, I just have 65%. It opened up, but the range that it opened is pretty small still from here to here. It would have been much more appetizing if the candle had closed like a bit closer to that resistance, like this, leaving like a lot more room for it to go up too. But instead, it kind of like wicked into that zone that we want to trade. Then, you know, the entry comes in like literally in the middle right there. So it's quite a small range because of that. But that's where price can move. You see, it's still quite constrained, like gold today. Let's look at NQ. There's a breakdown NQ. And if you're gonna start on a new pair, always start on the quarterly time frame. You know, start on the quarterly time frame. Anything that you're trading, it gives you a much better understanding of price. Like you see, if you look at gold on the quarterly time frame, if you've never traded gold before, you're gonna see, oh wow, look at this thing. It's just moving up over here. So you're gonna kind of like understand the broader market sentiment of the instrument. Now, as you start to go down, you start on the quarterly, you start reading the headlines of the instrument of why it's performing the way it's performing, and then slowly refine your way down to the LTF. And then start trading each daily candle as a unique day. Because just because the quality is moving up doesn't mean every day is going to be a buy. Every day is going to be different. But like on NQ, we have the daily at 0.04%. So there's no daily bias. You see, that's why daily bias here says waiting. So it could be like, it's a doji, right? If you look at the daily, it's a doji. So this means market participants are neither here or there. Right? Equal measure of buyers and sellers in this market. It's as simple as that. When I look for the daily bias, we're going to see where are the market participants today. Not yesterday. That was yesterday. Yesterday they sold off. Amazing. Where are they today? Our clean range. Trying to make a recovery here, but definitely a lot more selling pressure. Still feels like a lot more selling pressure, but dailies are doji. It's still deciding what to do. 5 minute looks a little bit interesting on NQ. We're starting to get rejection wicks here by the highs. You got a support area down over here, and if you break below that support, you have this range here to fill. So I do like the look of that. I really like this type of trades, especially on gold spot. Whenever we get those rejections, then you also see like a fake out, you know, like a potential liquidity grab over here. So you can like draw this zone and call this liquidity grab. So I close above like that. Now, especially now as it's like trapped the buyers in, I'm gonna probably see like if candlestick starts to close below that support. So you would have essentially liquidity grab here and rejection wicks right above here. So you're gonna have like those couple confluences together: liquidity grab, rejection wicks, and then you got here clean traffic. Clean traffic for price to come down. So pretty straightforward PA. I think that looks pretty nice. You don't have to kind of force your way into analyzing it. You see when it moves, when the market moves and they open up like this, you see just the way like on gold spot, it kind of like opened up. It becomes a little bit more predictable. You can anticipate the moves a little bit better. You see like it's a huge difference understanding this than it is to understand this. Right over here, just say we're like, if you go on NQ, it's a lot easier to, that's how I would say, especially because the daily, there's no bias on the daily. It's down 0.08%. If anything, the daily is bearish. Since it's still in the early stages as well, you might see that selling pressure come in for market participants wanting to get in from yesterday's PA. Is something really moving this market to the downside. This is quite a nice retracement to the highs, so you can start breaking the lows to come down. $15-minute doesn't even have a bottom wick. It would be reflipping essentially and then re-breaking the previous 15-minute lows. Which, you know, at that point, price should, respecting PA, it should just come down. A 1 minute consolidation as well. Oh, this would be such a clean setup on gold spot. You just get like a breakout of the accumulation. Candle's about to close as well. Well, like 13 seconds. It's starting to break out already. That'll be such a clean move, man. So clean. If you're not yet in, just wait for, if you are trading NQ, wait for the break of the lows. Yeah, there it goes. I really like the amount of confluence that come there. That's actually one of my favorite trades to catch on gold spot. Like this specific confirmation that we're seeing at NQ. See, I don't trade NQ, but you know, I just kind of like watch it. Watch the way price behaves on NQ, and you know, it should just respect PA. Because you see a move like this on gold would already be like 20 pips. Yeah, it'll be about like roughly about 20 pips. And it's already filled up the range here. Or it's filling up towards 65% at least of that range. Such a clean move, man. That's one of my favorite favorite type of trades to take. Like those rejection wicks, that liquidity grab. You know, just like nice little Gordon Ramsay dish right over here for you. Guys, tap right to the 65% mark of the range has been filled up. Yeah, that's one of my favorite, man. You get that shotgun confirmation as well with the breakout and SMA confluence. Ooh. The SMA confluence as well in the 1 minute. They're about to cross over. Damn, look at that. See, pretty straightforward. You come onto the chart. We didn't even have to do much analysis on this. You just kind of see it. You just kind of see it. You see like gold spot right now. It did like, it filled up the range, about 65% of the range over here. And that was it, right? Fill up 65% of the range, and that's it. But you kind of have to now really think about what the next move is going to be. You have to wait for market structure to print again. But that was it. That was the idea here. Point A to point B. Now you got clean traffic. On the 15-minute as well. Clean traffic, 30-minute. Somewhat clean traffic. Reactions off 65. I think that's it. But this is NQ, right? That's like what do you call this? Like 14 pip move? Ricardo? That's like 14 pip move, right? This NQ. But they call it points. So they would say that's would they say 142 points? Wait, maybe not. I'm going on the 1 minute. Break of the lows. Is it like 18 points? 18 pips? That 180 points. What is this, chat? Is this 180 points? Is that 18 pips? I'm reading this like GJ. See, the thing is, markets will move anywhere at the end of the day. Markets supposed to behave the way markets are supposed to behave, right? It's just now reading the point system is always something, because I specialize in gold, pound, yen. Right? And when you come to other instruments, you also got to learn how to read the pip calculations. But you see, the thing is, if you know how to read price action, it doesn't really matter, because all these markets, you can still all kind of anticipate the same movements from them. You just have to see now how to calculate your risk. I see you've been going on a lot of dates with NQ. Yeah, we're just kind of watching it here. But I can never pick an NQ trade, because, you know, like every day you gotta have maybe like 2 bullets, right? Say 2 trades. I feel also with the results wise, you get more consistent results if you consistently focus on an instrument, a single instrument, right? Because it's going to have its own cluster of winning and losing days. So for example, let's say you're winning a lot on gold, but now for the second trade, you're taking like NQ or GJ. Maybe NQ or GJ is at a losing stage of the cluster of losing and winning based off your strategy. So you could be winning on gold and giving it back on NQ or GJ. Winning on gold, giving it back. And then that could flip as well. Winning on GJ, giving back on gold. So I found it actually like feeling a lot more consistent when you're focusing on or like mastering into one instrument. Then the results also become a bit more consistent. Like for example, this week, we've been like streaming and calling so many gold trades. So many gold trades which have been playing out. So this would be like a very consistent week on gold. But on NQ, there were some of the trades that were having like these fake outs. You know, then that kind of also would affect the streak over here. So definitely, I think if I was trading a different instrument as well, like this would be affecting the streak. Clustering up different probabilities. But yeah, write a 1 in the chat if we're together, guys. If you understood like what just happened over here. There's no fair value gaps on this stream. Just pure price action. What is currently happening in the market that we can currently catch a trade. Not what happened last December or or CTO data from 10 years ago. No, we're looking at what happened right now. Whether rejection wicks, liquidity grabs, what levels do we need to break for price to move, and where can it move based off the current market structure that we have, you know? And then in between that is all about like managing risk, not being greedy, securing profits, you know, trying to have like a consistent approach now when you have risk on. But you see, that's a move. Sometimes the move just moves through that zone very, very clean. Like this, we're just going to keep moving even like right here and just completely bleeds. And sometimes you got to like manage your risk, you know, because the market will pay you out. Buys and sellers, you see, that's what I don't like about NQ. NQ likes to quickly reverse. It has this kind of a habit with NQ. It loves these quick reversals. I've noticed that as well. Like on gold, we don't typically get that. Like gold will pay you nicely, gradually. It may keep going. But NQ, you always got to be on your toes with this instrument here. I feel like it's always looking to fake something out, you know? That's what I've been noticing this week. It's like my second week looking at NQ here, like, or first week more properly. And that's a characteristic I've seen. It likes it. It keeps you on your toes. Keeps you on your toes. Because also the pushes aren't like really that major. Like a pretty decent push over here. It's like 14 pips, I guess, 15 pips. But you can't trust it, you know. You can't trust it. You don't know if it's a reversal or a continuation. But you know, for gold usually like if it breaks and then it retests, I'm usually just thinking it's just a quick retest. And usually it is just a quick retest, then it quickly goes like this. But I feel like with NQ it's a bit different. Like it'll come, it will retest, and it'll hang around there a bit longer. It'll hang around there, it's gonna play with you, and then maybe go in your direction. But you see, the variables also change. The longer it stays indecisive of the direction it wants to go, the variables change. Whereas gold, that window of variable change between entry and take profit is much smaller. It's like robbing a bank. You know, very clean cut moves. It's like with gold, it just wants to pay you out. It says, okay, let's just finish this, boom, and then let me move on. That's what it feels. With NQ for me, I feel like it still thinks to pay out or not to fully pay out. But this was a good trade though. Like it came, it filled up the range, it did what it did, filled up about like 65% of it. Now it's just retesting, you know. It's like maybe going back to check if there's more orders in here, more sellers involved, or rather trying to even maybe get out some potential break evens before it moves down. But yeah, once it hits like 65%, you know, anything can happen there. But yeah, typically we've seen this happen quite a bit as well. Retests of certain zones, especially on gold spot, before a continuations. So let's see what it does over here. Knowing NQ the way I know NQ, or at least my psychological relationship with NQ right now, I'd be expecting this to happen. I'd be expecting like strong volume to just come out of nowhere right now. What was the upside? From what I've been seeing. Let's see. Goldie's still setting up. You see, hit right at 65. Just the same thing that NQ did. Hit right at 65. Hit right at 65. You see, even just about the same amount, which is quite funny. Look at the amount that the wick went through it. Look at the amount that the wick went through NQ as well. At that 65% mark. Buyers make money, sellers make money, pigs get slaughtered. Yes? That's why sometimes you gotta see me like secure 20, 30 pips and not feel FOMO that price moved an additional 50, 60 pips, whatever. Because you know, at the end of the day, you're trying to secure something. I'm just trying to get something out of the market because I know if I hang around here too long, I gotta deal with all this additional stress over here. You know what I mean? I think people trade NQ also trade with like tighter stop losses, so you wouldn't have like such a big stop, to be honest, because the moves are not really that exuberant as well, so you'd also have to like tighten your stops. But you see, like 16.5 pips on NQ would be quite big. Or like 20 pips feels to be quite big on this, so I'll probably use like half of what I use on gold, maybe. I had an entry on NQ, but was focused on German 40. NQ still playing out to 1 to 2. That is the normal. It's like hesitating. It's flirting with that level. It wants to reverse on the sellers. You see, it wants to reverse on them. It's like sitting over here. Like if it breaks above 24,718 over there, it's gonna have that much stronger push that I'm actually expecting. It's because you know you got sellers still in here, so selling pressure came in. Some people still holding the sells. It's like open money basically sitting above this area over here. And it's like a bit volatile as well, isn't it? Like if you look at the ticks, the way it's ticking, it's like unsettled. Like it wants to do something. Very nuanced things that the market does. You read into that and you're like, man, this thing can be a dirty pair. See, we're gonna respect above this high right there. We gotta say potential reversal. Because it's tested this area, it's getting the orders in for if there's going to be any more selling activity. So if it digs deeper through that, most likely more of a risk management model because it's already retested for entries here a couple of times. It shouldn't keep retesting. You know, it keeps retesting. There's a high chance that next time it breaks the high there, it's going to reverse. What's the tool you use where you can see 65% mark? This Fibonacci. These are the Fib settings right over here. That's a Fib retracement tool that you can find on your left-hand side over here. Goldie's setting up again. It's quite tricky on Goldie. You see here, massive accumulation, short-term sell-off, short-term correction, but overall 90+% of this is range. Looks like NQ still in the distribution because it's at this point it looked like it was just a retest, not a reversal because it didn't re-break the highs. So just retest to try to find some more orders and continue to push down. And you really gotta like build a strong psychological relationship with the instrument to understand better whether the retests are potential reversal, V-shaped reversals, or a retest to continue in your direction. For gold, I feel quite confident most of the time it's just a retest to continue in my direction. Yeah, that's like filling up more of the range over there. Nice, down towards 24,684. Not the cleanest push straight down. Clean push down towards 65 and then retest. Get more orders in. You see you got some more sellers involved. Right here, this is what we call a high value area. So we can say it's a high value area to where those entries were triggered. I read that yesterday's bear move on gold was literally just market correction. We should move bullish longer term. Yes. I think it was more technical. Possible reverse head and shoulders on the 1 minute on gold. Yeah, possible inverted. You can see without volume starting to come in. Oh, what is this? Quick spike back above the high volume area at NQ. Feels overall rangy today, huh? Like NQ is like rangy, gold is rangy. Moment of windows of opportunities are quite tight. You know, you had that small one right over here. And also with gold spot, you had this small one right here and the small one right here. Clearly markets are waiting for something today. And very much thinking of how to go into the weekend as well. With Trump and his volatility. See if Trump is due to speak. We got a 7:15 a.m. Official schedule. The President and the First Lady depart Palm Beach, Florida, en route Washington. Out of town travel pool call time. Yeah, it doesn't look like Trump's going to be doing much talking today. Pretty chill weekend for him. Flying out with the First Lady. Palm Beach, Florida, en route Washington, D.C. Chill Friday for Trump, it seems. We'll see what he does over the weekend. Markets are mainly waiting for core CPI today. I guess that's going to be the main event. Numbers are most likely coming out neutral as well. So, yeah, anything can happen. But we're expecting more further upside on gold spot anyway. Especially once we get through that hourly resistance. And this is something that you can look forward to possibly throughout a New York session. Because I know some of y'all might be trading New York session. Price action starts to come above here. It should be quite straightforward in terms of directional bias by that point. Especially if we can get the core CPI numbers to come out first. But it might even start happening breaking before core CPI. But either way, when we get to this area here and price is moving, it's most likely just going to follow through for the rest of the day like a lot nicer. The problem is a lot more people are going to waste a lot of money here. It can happen where they get caught in choppiness. And then it's only later it gets easier to trade that now you're out of ammo. You know what I mean? Like, yeah, you could catch some trades. Just like the way we caught the buys on Monday, on I think it was on Wednesday, on NFP. The markets were still choppy, but we're able to weasel away a buy because price had done the same thing it did right here. Price had first come down. It created like a range for us to trade, but we were still overall in that consolidating market environment. Most people are going to lose like money here before like price starts to move. It's going to start moving. It's going to be a lot more straightforward when it starts to move. So it's also a skill that you can train yourself is to understand the different times of when not to trade, right? A lot of the time like people are not profitable because they just don't know when not to trade. They don't know when not to take a trade. Because you can have a good system, but any system overused and in the wrong conditions is gonna give you like unnecessary PNL bleeding. And that's why when you take a loss during one session, that's why we typically say just call it a session, because you don't know, sometimes you don't know that session's gonna range. Like it looks good when you're coming in, you take a loss, and then later on you look back at the day and you're like, damn, like I was really caught in a range. And then it's only then after all the bleeding has happened is when you realize that you were caught in the range. So that's why we say, like, you know, you take one loss during a session, come back the next session. Most of the time your trades were not going to play out anyway. CPI good for USD maybe. It's coming out as the difference is not that big. It was probably neutral. A small window of opportunity there on NQ. Now it's got to set up again. Now it's got to do structure again on the 1 minute. But you see, that's why, like, I tell, like, these moves are so nice when they set up in this certain way where it's a lot easier to read. Right? It's a lot easier to read something like this. All right, setting up again. Loads of confluence there. Even the gold buys were a little bit more difficult because of that wick. Even right now, it's a bit more difficult because you can see it's like wicking a lot. It's wicking a lot, not really much. NQ, more or less the same. NQ is stuck in a much bigger range, I think, from here to here. Daily is only down 0.12%. What else should we look at? Let's see. Was it silver? We got silver analysis. Yeah, silver analysis needs to come above resistance. It needs to break above here. See, it's already in the way up, but it needs to re-break above these highs, and then it can keep moving up bullish. That's probably what's gonna happen with gold today. I don't like speculate. It's Freaky Friday, but if you get the Audis start to break above, it's gonna be a similar situation like silver. Like silver is already on its way up. You see, silver is at least moving somewhere, whereas gold is still like bearish. You feel like a lot of this bearish weight on gold, but this is all like technical, and they said profit taking, margin calls, algorithmic trading. That was the reasons behind like these sell-offs yesterday on gold. But it's not like something majorly sentimental that gold should come down, you know? So I think like best case scenario today, price breaks above 49.90. We break 5K for the week. And if the weekly time frame can take over 5K, that's going to be the most important thing for markets, is to see if the weekly can take 5K, 5,000 psychological. So right now, the weekly has been kind of a doji, right? And that's what we've been experiencing all week. A lot more like indecision because we had all these red folders. So you see that week, the whole week, chat. Look at where we are. Still doji. Yeah, Goldie sign set up again here. A little bit much nicer. It's gonna set up like a, like looking for a potential reversal play above here. From this area over here where it previously broke below. See if like that could be the move that actually pops it up quite a lot. Back towards that hourly resistance. But that's kind of what it's setting up right now. If you look at the 4 hour, it's created a higher low. That sell-off just looked like it was creating a low. Oh, I haven't heard from Zoli in a while. That's true. That is very true. Let's see what Zoli thinks. Will price on gold close above $5,000 today on Friday? To close the week off. Let's see. Let's fill the deck. What do we say? The card whispers of abundant fortune with dreams reaching for the stars. Yet the burden of achievement tempers this ambitious climb. Gold shall not close above $5,000 today. The winds of fortune sway elsewhere. Oh man, got the wind swaying elsewhere now. So yeah, we gotta see. It says we're not going to. Today's one of those like Fridays which are just gonna be full of surprises, I feel. We got the 10 of currencies. You're taking those final steps on the path of realizing your dreams. Significant gains are coming. Amen to that. Significant gains, I like the sound of that. Soon as gold starts behaving, then we can see the significant gains. Starts moving next week. But I feel like I'm marrying a buy bias too much on gold as well. I feel like I'm a little bit more lean towards gold buys. I feel like it's one of those days where I get surprised and then price just goes in the opposite direction. There are potential gold sells as well below that low if candlesticks start to break below. Because if this truly is like support, then price should not be re-breaking that support. If it re-breaks that support, you know, we've been seeing some selling activity from yesterday. It might still carry over today, potentially. So if the wind starts to blow in this direction, pretty good chance, you know, it's just going to keep blowing there. But if it starts to reflip, re-break the highs, then it's probably a good chance that it's going to come back up there. See, that's on the 1 minute. Yeah, it's a pretty fat accumulation. So you see, the market basically just deciding here. Tanner, what are we going to do? What are we going to do, chat? Are we going to go up or down? Potential reversal play, potential gold sell. I was thinking, what do we do? Should we take that high? Should we come back for the sellers over here? Because the sellers dominated this area. They did a nasty liquidity grab above that high and pulled down. But now we've already retraced down, kind of like dipped a bit. Dip for a repush, a reattempt above the high. Yeah, NQ is doing the whip. It filled, at least NQ this time filled the range, right? At least it did what it was meant to do. It was meant to break and fill the range, and then now it can do its whips. A V-shaped reversal there. Both markets setting up. First week of live account, -2 losses were mistakes on my part, but I will learn from it. Thank you, Vic. Oh, nice. Pretty good week over here, though. Very well done. This is a very steady week. See, you're risking 5% a trade, or you're risking, it seems like you may be risking 2% or like 5% because you lost your 4.52%. Yeah, solid week though. Very well done. 3 W's for the day. Time for tea. Have some tea. I want you to have some tea. London Gold expecting volume. Console breakout with clean range. SMA 1 minute candle before entry, 25 pips secured. Very nice. You see, nice little dip over here trading inside the valley. The valley of death. Oh, nice. Gold is breaking out. Potential is attempting that potential reversal. You see how the volume is starting to come in over here. Ooh, crazy. Push up like 84 pips right off the rip on the 5 minute. Scary position. I think, did we take a position like this though? Was it like this week? Price had pushed up like, push up like similar to this, like 80 pips or something, and then still gave it like an additional 30 pips. Those 5 minutes sometimes can really skyrocket. Of course, not the ideal situation, but you know, sometimes when the setup is there, you just gotta take it. That was the case. I think it was on Monday. But yeah, it is trying to reverse on this sellers right over here at this point in time. See if it can do it. See how exuberant it came in as well. We got about 2 minutes before the new 30-minute open. I think I also did like a small liquidity grab here on the 15. Took out the lows, took out that support. Looks like it's not potential gold sells anymore. Since it broke the highs, unless like for some reason it pulls down aggressively, then maybe that would still be looked at as a liquidity grab. But as of right now, it is still picking a direction, and it's picked a bullish direction. See if it can reverse on this players right over here. It's like yin and yang. You know, like price came here, consolidated, break above, consolidated. It's attempting to break back above this area to test the potential buys on that hourly time frame by 49.88. Yeah, very clean move this is. Price came down, boom. Filled up the range.
Legit fighter I've ever come across over there. Everybody else was, you know, easy killing. Like, he humbled me big time. He made me realize I wasn't who I thought I was. On that day, we fought all day. You know, he had us pinned down for 3 hours, but we fought for, I believe, 9.5 hour gunfight. The whole op was over 12. I'm pushing 15 plus. But he was the one that humbled me. Never got him. He got some of us, but I never got him. That was the one that shook me to my core.
The Chen sniper. Oh, damn. Nice. I did 20 pips. Did 20 pips on the break. How many points was that? It was about, let's see, from here to here. About 25 pips. Oh, nice. Could have been a nice little in and out there. Just same trade that we took on Monday. I got the last trade of the week on gold. Oh, awesome. Yeah, that's been a pretty good move. Pretty good move. I feel like that's how my moves were. Also a lot what do you call it, like yesterday felt like it's quite similar, you know, like price will push down, hit my target, what I was looking for, and then pull back down. Also the same thing in that trade that we called, I remember from yesterday's stream, like here it pushed up like what, 25 30, and then it pulled down, and then I'm like, all right, so we're coming back to retest, pushed up again here, then I think like 20, and then it pulled down. Same thing that happened here. That's how I always secure profit. I always just anticipate these type of market conditions. I will always secure at a 16-20 pips. It's like lock that win in, because you don't need to be right, remember, like we're just trying to get the move. So that was a setup right there. Nice little 25 pip banger. Don't need to be right. I don't need to be right, because most of the time, like when you're right, you're gonna find more of losing trades. That's when I started realizing that I'd have a lot of these trades going to profit and then eventually come back into stop loss. So you don't need to be right in the market to make money. You just need to be right enough. And right enough can look a bit different for each individual. You know, like for example, there's a guy here who commented on my post, and he says he looks for a minimum of 100 ticks per trade. So you're looking for, so maybe it'll be better, like you're looking for 100 ticks. Where is he? Yeah, I'm 40 years old. I'm also a scalper, but my target is 70 to 100 ticks minimum. I'm like, you know, awesome, because that's still a lot for market to move, right? Like if you're going to move like that much, it's still quite a bit for the market to move. So again, it's just additional exposure. If you got maybe a bigger stop loss, but sometimes there's a way, even with the biggest stop loss, that the market is calibrated to even still take that bigger stop loss out. So that's why he was wondering why I'm securing like maybe like 16-20 pips, and that's the reason I secure it, because that's cash. That's cash. You secure that amount, put it in the bank, simple. And the more your account grows, the more cash you get for like the smaller moves that you make in the market. Because the whole idea behind trading has always been capital. If you look at a hedge fund, the whole idea behind the business model is to get capital, get investors to come in and increase the amount of capital and assets that they manage, right? It's never always been to trade the biggest low risk, high reward and to be like super correct. It's much harder to do that than it is to just have capital and make money work for you a lot more smarter. That's why we say the rich always get richer. And it's much easier for the rich to get richer because they already have money that can work much more efficiently for them. Correct? So that's always been the idea behind markets. That's why for me, I try and look in terms of like, let me try and have this, like a $20 move on a regular lot would be like $1,000. But in like 5 years, that same $1,000 could be like 5K, 10K. And that's kind of the way that you want to lean when you look at markets. You know, it's generally like that. Even when you look at your retirement fund, if you had $1 million worth of retirement in an index, let's say, for example, you never have to worry about money because you don't have to touch the principal, but the percentage gains you're getting off the principal will be enough to sustain a comfortable lifestyle. Because now you have enough capital that you don't need super exponential moves, but you can just live off the interest that you're getting, right? Like if you invest $1 million, then it's more likely that even if you have a budget of, let's say, $5,000, $10,000 a month, I think you can live quite comfortably without touching the principal or like worrying about eating into your investment. You know, that's generally the speaking of how people perceive investments and that sort of thing. So it's not different from trading. So that's why I say, yeah, that perspective of risk reward and even considering looking at trades more in terms of percentage gains it's much more applicable to the environment that you're operating in. If you start looking more in terms of percentage gains than just the risk to reward, because at the end of the day, your month is determined by your percentage gains. So just a way to consider approaching markets. Because in the retail space, everything is easily diluted down to that. Let's see, I got the last trade of the week on gold. Gold is just amazing at this moment. That's why Profim closed it down. You just need to be right for some seconds a day, and that's enough. You know, I got denied payment on top one traders because it said I was micro scalping and some shit like that, because I had trades 5 second and less than 30 second, only 1,000 withdrawal. I had like 700 bucks like that. The more you stay in the market, the more you get yourself positioned to lose. Exactly. And that's why it's such a good environment. Like, that's why they don't want you to tap into. They don't want you to tap into that because it's super forgiving. Like, it's insane. Even a move like this, I was looking at this move, I was like, damn, would that be a reversal? Then I came on here and then I looked at the 1 minute. Then I'm like, oh no, this thing actually pushed up still 25 without any drawdown. I'm like, okay, cute. We're still good, Goldie. It's like super forgiving, but you know, like NQ is not as forgiving as this. NQ will just freaking reverse on you. Plus that move on NQ would just look so much smaller in terms of the pip. So like the type of volume that we expect out of it, it just feels smaller. But yeah, it's brilliant, man. It's really brilliant. That's why I say that the market, you know, pays buyers, sellers. It's only the pigs who get slaughtered, the greedy people looking always for like 100 pip moves and 1 to 10 risk rewards. Those are the guys who are like really losing, you know. Because they don't understand like the environment they're operating in. Yeah, and the market is not here. It's never been there to serve brokey mentalities. It's always been there to serve the wealthy mentality. And it's been operating the same ever since. The only thing different now is like we get a lot more leverage, so a lot of us can get involved. So the barrier to entry is a lot lower nowadays, which is amazing. Yeah, brokers give you 1 to 500. You can build a skill. The power of the internet and technology allows us to get involved. Before, this was a well-kept secret, and the wealth were just rinsing it. They kept rinsing it. They kept using it to magnify their gains, because of obviously you never got taught about markets in school either. So, but now it's like social media, we're getting these things like become more obvious. And man, in the past 10 years, there have been a lot more millionaires than there've ever been in human history, just due to the information age. But also with information comes a lot of clutter, you know, a lot to like get through, to filter through on the internet. So you want to move correct. You don't want to move fast, you want to move correct. If one can live off 0.1% for monthly expenses, 2 to 5% are hell of a gains.
We don't do that here.
Yeah, it is a hell of a lot of gains. That's why people usually move to third world countries. Like most people, when they make a lot of money, they're gonna move to a third world country because you literally can live like a king. Like if you already had like $1 million invested and you're getting, let's say, like 10% a year just passively, dude, you have like what would we say, like 50,000 plus a month, $50,000 plus a month to spend just passively like that. You're never even gonna spend that month. that much. If you live in a third world country, you're always gonna spend, let's say on average, in a third world country, to live like proper, maybe like 10,000. Like I don't think you're gonna spend more like $10,000 a month, and that's already quite a lot. It means you're doing a lot to spend that much. So if you can just figure out how to get the first million, I think the rest of it is a lot easier to manage. The first million is always the hardest. I don't remember what entrepreneur said this, but they said the first million is always the hardest to make. But once you get the first million, the rest comes like a little bit easier. You know, just like in trading, the first $5,000, if you don't have like a properly paying job, is the hardest to make. But once you get like 5K, it's much more easier to grow like 5K and then see much larger gains from that, like 10,000 plus. You know, it's difficult as well to start from like 500, go to 1,000. It's also just like a psychology thing because it's obviously a low amount of money, so it doesn't feel like worth your while. Once you get like, at least I say a minimum for a lot of traders is like 5K. Get like a 5K account, you can exponentially grow that account. I'd rather take like, I would say I'd take a 5K account than any kind of a prop firm. Just give me like a 5 live K account and I'll just grow that. You would grow that exponentially because, you know, if you're risking 5% of 5K and then you get to a milestone, let's say $10,000, you start risking 5% of $10,000 and just keep doing that. To get like $15,000, start risking 5% of $15,000 and just keep doing that and that and that and that. $10K is even enough in Germany to feed a family of 4 comfortably if you don't live bling bling. Yes. Yeah, generally it is true. I think the idea of money warps a lot of people's perspective on the real world, especially like the younger people are more impressionable to this. Like the people who are showing on YouTube and they watch the Logan Pauls and the Jake Pauls and all of these things, I think they underestimate the power of even $10,000, or like, you know, like having that amount of money. They kind of downplay it because this guy is doing like 50K days or this guy is doing $1 million days. They're kind of like delusional to the fact, so they're more prone or manipulated. They're being more manipulated because they haven't had that real life experience. For them, like even for them, if I make, let's say like $200, it's like, oh, this guy just made $200. Well, what do you mean just $200? Making $200 in a few seconds? Try and make $200 in a few seconds in the real world. You're gonna see how you'll put like a different kind of a value to money, you know? So that's why I said, like, you know, if you can make like $50 a trade even, I feel like that should feel good. There's an extra $50 on top of your salary. $50 a trade, you can end your day probably like $100 days, and that's just only gonna exponentially increase. That's a beautiful thing about it as your account grows. So that's why I'm quite good at, I will always secure something. You know, I don't need these home run trades. I will always secure something. You know, at that point it just becomes a game of percentage risk. So if you feel like you're not happy enough with the percentage gains you're getting, just increase it to a maximum of like 5%. Don't go above 5%. Yeah, just take it like 5%. Because above 5% comes with a lot more psychological baggage. Correct? But this would be the maximum amount you want to risk, and preferably one trade. If it's a losing trade, you call it a day. If it's a winning trade, you can take another trade, because now you're risking a lot. So like on each of my trades, I'm risking about like, you know, 2%. Realistically, with the market conditions that we have right now, it's like 2%. 1% if I reduce the lot size. But on average, I would say it's like 2%. That's how much risk. So you can think of this like a 1-to-1 if you want. 1-to-1. Obviously, each trade is different. I risk 1% on this trade, but on my average is 2%. So you can consider that even a negative RR. 0.5 there at 1.16%. But the idea is I'm focused on percent. See, there's like 3.69, 1%, 2%. Losing days here, lost about 4.55%, 2%, 1.50, it's 2%, 0.70, 1.36. Focus more on the percent, because this is where the real magic is in trading. It's taking fewer trades, higher probability trades, and the percent. It's not the risk to reward. It's harder to do the risk reward. Yeah, it looks like NQ is not doing much, just holding over here. Didn't a bird guy live in Thailand or something? Well, whatever happened to him? Remember at some point, like, people were like talking about this guy a lot? Berg, the German guy? Berg Trader. Whatever happened to him? Was there like a scandal or something? I remember like seeing like a quick scandal of sorts. Berg. Oh, he was trying to take down channels which were exposing him. He almost took down this one guy's channel. I forgot his name. What is his name? Berg. I typed into YouTube Berg German Trader, but nothing's coming up. Bergenstein. Berg. Trader. Anybody in the chat know his name? His channel still exists? Oh, whoa, Goldie is heading down. Downtown. Downtown. See, another little break here. Even getting at the ends of that break was, how many pips was that even? At the end of that break was about like 32 pips. That would be like 3% for me, I guess. Somewhere like three, maybe 3%. Even catching it that much further in. Nice little 3%. Don't need to be right again. Any opinion on my trade in Discord? Let's have a look. See, any opinion on consolidation trade coming from a 4-day win streak, took liquidity and had a bearish bias going in. Maybe just wrong bias on my part. Oh, this move is not fully set up yet. You kind of like selling into a failed, this is like a failed head and shoulders. So I wouldn't call this like a console play right here. It would have been more of a console play to the upside if it broke above this high. But this is more of like you're just selling into that failed head and shoulders, inverted head and shoulder, or like liquidity grab. That's what you're selling into. But you know, after this happened, then you can talk about, now since we created a support over here, now we can talk about the sell. If it rebroke the lows, then that would have been more of the thing that you were looking for. But you see, you came in here, there's no structure here. There's a failed head and shoulders or failed liquidity grab to move up after it created like this resistance here. I think that was the issue with the trade. Or rather, that was the issue of the trade for TFX trade. That would have been much better. If we rebroke those lows, yeah, we could have seen further downside potentially. See, you got a trend line confluence too. Yeah, I don't even know if you're trading the trend line. You might have been trading the trend line as well. Candlestick close below your trend line. Break of the trend line. This consolidation trade coming from a 4-day win streak. I don't know why the trend line is there then for consolidation, because consolidation is not a trend. Consolidation is sideways movement. So maybe just confluence maybe. Yeah. It's like the same way as someone can use a Fibonacci in a consolidating market. You know, you don't use Fibonacci's in sideways moving markets. You use Fibonacci's when price is moving up to catch the retracements. You're using a trend line to catch a consolidation. Yeah, here it is. I found him. Yeah, this is what his name was. Burned Koperinski. German name over here. All right, so he's still around. 8 days ago. Yeah, it's funny. You know, YouTube algorithm is like that. You completely forget about people if it's just not showing it to you. Trading stats making sense. Did he move back to Germany? Or is he still in still got his house in, I think it was Thailand. Yeah, pretty nice house in Thailand. Guy should just move to Thailand. Guy's house in Thailand sick actually. Let me see. It probably doesn't even pay that much. I built a $2 million house in the middle of nowhere. It looks like some kind of a rave house. Okay, for like what are you, like Tomorrowland or something? I take him and his brother were either in Thailand or Dubai. Oh, I think him and his brother were either in Thailand or Dubai. Oh yeah, because of like business, you gotta like kind of live in Dubai. Like also like Raja, he has a much better, I would say, from the way I've seen him and when he's back in Pakistan, he has a kind of like better lifestyle there in Pakistan, but you know, it makes the money in Dubai. It just makes more sense for him to be in Dubai. He's not legit. Well, there were a couple of videos made of him from this really nice channel that kind of was exposing him, and he almost took down a whole channel And it's always kind of suspicious why somebody would go through all that effort to try and take down videos. Like, if you're legit, you're legit, you know? Like, who cares? People make videos on you. Like, you shouldn't put that much effort into trying to take it down. You know? It's like, whatever. If you know you're legit, right? But this guy literally almost took down a guy's whole channel. I mean, I get the whole defamation thing, but it's the freaking internet. Like, people are gonna post whatever they want. Plus, no one successful has ever been successful without being called a scammer down the line. Like, everybody gets called a scammer down the line. There's not a single person who's like also squeaky clean. It's just the way it is. When you get really big, there's just gonna be people who also just want to make content. Yeah, it was this guy. This guy's channel almost got taken down. Marcus Adrian. The bro was on his literally on his last strike. So some of you might know who this is. Pretty nice channel. Yeah, but Goldie's distributing now. It's just heading downtown. It's just distributing from this area right over here. Looks like the initial break towards the highs was overall just a fake out, but you know, like it paid out. Awesome. Also, this sell here paid out, but it was also a fake out, but it still continued to move down. So that's just the thing about the market. Like, it will pay out, but it's just about how can you survive it's like riding a bull, right? It's like riding a bull. Like, how can you survive the fluctuations? That's why people say like day trading is gambling, right? Because it's true because of the fluctuations. There's a lot of those like quick fluctuations. That's why it's even more so important for you not to be greedy and actually like leverage off of these like really nice pushes. And then every now and then you don't get the fluctuations and then price just goes in your direction. But it's not every day you're looking for that kind of a move. You know, those moves are going to come like specifically based off of the structure and the opportunity that are presented by themselves. Bread, what do you call it? Like bread and butter. Like securing something is your bread and butter, and then holding the runners is the icing on the cake. Friday the 13th. Hey, yeah, right. Friday the 13th. Freaky Friday. Friday the 13th. Oh, Valentine's Day on the 14th. Oh, Valentine's Day tomorrow. Maybe Trump can give us a small Valentine's Day present for market open on Monday. He can say something over the weekend. The only candlesticks that I want to see on Valentine's Day are the ones on the charts. Candlestick dinner. You and your girlfriend looking at charts together. You and your wife. Let's see. All right, so price coming down here. We got like what's this, 5-minute support area. Ricardo's already slowly converting his wife to a trader. Is making the moves, making those plays. Yeah, got a range here. Got a range here. Price is coming down if price can break below support. I got some potential sells. You see, now the market is waking up. Now you're starting to get a lot more direction. A lot more direction in. Look at this. Finally waking up. It's breaking away from all this garbage over here. Yeah, so I think they'll actually, like with TFX concepts, there was that one buy that we called out here, which was supposed to be the potential reversal play. I remember stops at like 16, 20 pips. Did about 25. It was just that one, and then also the break below here. That's why it's quite important for you to be locked in. If you're just waiting for me to like perfectly align everything for you, then you know, then you don't see the moves. Then you don't see the moves. I'm showing you where they are though. But that was just that one there, and then it was a break of the lows down over here. But there was a cheeky one that happened right here as well, right in between before breaking the ultimate lows. Over here as it broke below that area over there. But I think like if you're gonna stick with the stream for like, you know, a quarter or so, like 3 months or so, then you can kind of like see what we're talking about. You kind of like understand it. But if you're new to the stream, then, you know, obviously I don't expect you to know it. But what you're seeing now is a distribution. It's distributing. It's distributing from these areas over here. So there was that one move happened up here. There was a small cheeky one over there. And then there was a major one over here that pushed, retraced up first, wiped some accounts. Again, continue to move down bearish. So initial push was quite good. I think it did like 35 and then it pulled up. Because, you know, people sometimes still hold. They like pull up, go against them, and then continue in that direction. And now it's flirting with 49.45, looking to tumble. I just knew it. I feel like it was one of those days where you just marry a buy bias and then prices reverses and does the opposite. So we're seeing so far right now, gold is still daily bias bullish at 0.56, but definitely seeing a lot more of this seller activity coming in. Imagine getting your wife into trading, then one day she says, I'm an ICT trader now. This would be me. If my son ever came to me one day, first I would give him a whip. First I'll give him a whip. And then I would look at him like this.
Oh no.
Wait, why is there so much background noise? Yeah, that's how I look at him.
Oh no.
This is ICT's origin story. Disappointment. After all that I've done for you, you betray me. For CPI, it will go down to 47.54. 47.54. 47.54. We got clean range down towards 47.74. Like the daily candlestick reflips and re-breaks its lows, then yeah, price can probably come down over here. We might actually see a bearish day. It looks like the potential buys and buy target are not necessary to have now because that hourly resistance is really far away. So it would be looking for the daily flip would actually be coming in. This would be a potential target then at that point. You got the daily flip all the way down here by 48.87. We just need to get through that support. You see, that's the last support that we're currently flirting with. And we just got a new hourly open as well. That's the last support right over here. So we get through that. We got clean traffic towards that next mark. At 30-minute support by 49.28. Also clean on the 5-minute. But at that point, I think it's just like we're just going to tumble. Completely tumble. And it's good that a new hourly candlestick opened up so close to this level as well. So that could actually be the case for gold, because you can see gold today, it's really struggled. The buyers have struggled quite a lot. Now, you've noticed since the market open, like not market open, but the pre-London into London open, like the buyers here really struggled. Eventually, it did end up selling off. It gave one last push, like literally that break above that we thought would be a potential reversal play was the last. It was the last push. Actually paid out some buyers and then that was it. The market said no more buys. Let's just freaking roll over here. You see, now it's in momentum. like it's awake right now. So I think it's pretty nice. It's like it's moving. A little accumulation break, but it would be nice if there was a support right over there before the break happened. But yeah, it is looking to fill the range down here. That's gonna be like 166 pips. Same thing with NQ. NQ still looks like it's also just tumbling at this point as well. It's just coming down towards or rather it's just continuing this momentum right over here. The daily is down 0.40%, so you can see NQ is also starting to trend now. So both markets are waking up here at pre-New York. This is pre-New York time. So NQ is on the way down. Let's mop up this analysis. Bro, give us some trading signals. I've been giving the signals. You're just not hearing them. How much downside can we expect on gold? A lot further. Especially if the daily starts to reflip, this thing is really going to tumble, but it's already on its way down. It's going to look to fill this range. The good thing it's breaking out of this whole area over here. This whole area is garbage. Yeah, so this was kind of like the main point where that distribution really started from here. Oh, Viral Boss, congratulations to those who went long yesterday. But you never gave a stop loss. Price came down like quite heavy before it went up. So how big, even if you say you don't use an SL, your account still has an SL. There's a point in the account where it's going to blow if it goes below. You were calling, I think, the longs like throughout the London time when we were trading. Somewhere here, but it dipped quite a bit before it went up again, but... So it's important to send in a chart, it's hard to see what you're seeing if you don't send us a chart over here with your long and short position. Long and short meaning also like take profit, because when you hit take profit, it's the same as shorting. You kind of like give that release from the market, like profit taking. Double bottom. Flirting with 49.45 because it knows it's going to get through this level here and there's not much standing in its way beyond that point. And that hourly's already created a top wick too. You got a top wick on the hourly. Candlestick trying to break. It needs to start re-breaking its lows. Yeah, if it re-breaks its lows, that's going to be the proper distribution there. Because if it re-breaks the lows after consolidating like this, then that should be the continuation. But you see, if it re-breaks the highs, that could be a potential reversal right here. Like, it could push up a little bit more. So ideally you'd want to see candlesticks start to reject. You see, like few rejections over here, and then start to break the lows for price to come down. Like that. That would look quite similar to what it was on NQ when we called out the trade here on the 5-minute time frame for the shorts. Like little price action here where we got that rejection. All those rejection wicks. With the same thing here, if candlestick could pull down and then start to re-break the lows, and then come down. See, we close above. Well, holy, it's like quick reversal there. But ideally, the sell would have been much nicer since it's already in like a sell momentum right now. See, DXY is moving up, so it's affecting both at the same time. It can still be a grab, 30 seconds, yes. See, it like pushed up. It doesn't matter even if that's a grab to come back down. It's still pushed up like about 50 pips, right? I think it's still pretty nice for anybody to like take a buy here. Because there was a setup. The only thing here was a going against the volume to the downside. But I guess the daily bias is still bullish. But during pre-New York, if we're already moving down like this, it would be much nicer to just see like a push to the downside. So for me, in a situation like this, I'll probably have missed the first buy and then just keep watching to see if there are any further buy confirmations. And if another one comes, then I'll probably take it. Because I would still be under the impression here that we can keep moving down. Instead of like taking a buy and then get into a fake out, it would be nicer to get that fake out confluence for the break of the lows to keep pushing down. Because if we're playing with a new hourly, which is really fresh, you know, it still hasn't had its move yet. It's probably going to be a bomber clap move too.
Bomber clap!
Because I feel like if it's a sell, you know, sell's going to move a lot faster anyway. So if it was going to sell off below here, that would look a lot more appetizing. 49.40. Like a Freaky Friday trade. Freaky Friday sell-offs. Waiting is a key that can be at the top of the week of the exactly, waiting is a key that can be the top of the weekly of the hourly. Yes. See, it's like fluctuating quite a lot. There's still somewhat a lot of selling pressure. Although it's like a mini inverted head and shoulders here. See anything interesting happening on NQ? NQ is just melting off completely. Hello, say hello back. Good morning. Say good morning back. Say it back. $35 seems like a good zone to scalp. I think like sells are going to be very good below that support. 49.45. People love coming up with new ways to say the same thing in forex. Yes, because markets only move 3 directions anyway at the end of the day. So I don't know. I guess People just have their own way of saying things. Like we call like clean traffic, clean ranges. You can call it whatever you want to call it. This clean bodies. Four-hour lows cleared. Acceptance above here could send it back up. I think it would go back up if this candle closed bearish and then the next candle create a support above resistance to keep pushing up. Then it could probably move up bullish. But right now there's nothing. There's nothing. 1 minute still setting up. It looks like just possible top wicks being formed. Price will continue moving down bearish. But yeah, if we create a resistance and then have the next candle do this and re-break the highs, you could see a probability of it moving up. Could be cautious about this 8 SMA catching up currently. 2 PA. But I think at that point it should be even closing above the 8 SMA. The 5-minute candle will be closing above the 8 SMA. You see still loads of selling pressure here in the market today. I feel like just like loads of risk off. You know, there's just a lot of risk off. Now we're heading into the weekend. So I was saying like these moves, like even the moves from yesterday, this was what was called a moves from margin calls and profit taking right over here. As the week is coming to an end, you're seeing more risk off because we don't know like what's going to happen next week. You know, we're getting the numbers, the red folder numbers this week, and then over the weekend we'll see what Trump cooks up, but it's still uncertain. Like the overall direction of gold on the HTF is definitely uncertain right now. That's why we're not moving up like we were before. But I feel like once we start crossing over that daily resistance, it's going to be a lot more clear. Even fundamentally, macro fundamentally will be a lot more clear. China's gold trading frenzy looks more like a speculative bubble. The recent gold trading frenzy in China appears more like a speculative bubble than a typical flight to safe haven assets. Demand is major driver of gold prices, fueling greater use of gold-linked financial products. The increase in gold warrants on the Shanghai Futures Exchange also indicates that futures trading has become a bigger part of China's gold market. The continuing property downturn should support safe haven demand for gold in China in the medium term. Points out that Chinese investors are increasingly using leverage to gain exposure to gold. That could heighten market volatility, potentially increasing the likelihood of sharp price swings like those seen earlier this year. Oh, very nice. Sharp price swings is what we want. Sharp price swings is the reason why people have been making so much money on gold. That's the reason why the market is so forgiving, especially to day traders. So I think it's pretty nice. Or like rather, let's say scalpers. And we're gonna get this sharp price movement. So forgiving, man. So forgiving. So forgiving. Like sharp move like this. Because it will move like 30 pips before it even thinks of reversing on you. You know, like move 20, 30 pips at least. The only thing here is your confidence in your stop loss. You know, and that will be based upon your strategy and what your strategy is capable of. So with TFX concepts, we're able to get like 16, 20 pips. No problem. And then get away with a TP before any kind of like reversals. Sharp price action. Loving the extra stream duration this week. Is it permanent? Nothing in life is permanent, young grasshopper. But yeah, for the meantime, it is. You're gonna short as soon as it breaks support. If it breaks out support, it should melt off. It should definitely melt off. Like the way it's moving right now. And give like a sharp price action. Even if the structure is not the cleanest, it would actually need, ideally for that break, what you'd like to see is a support to be formed either here, or, and then it breaks, or a support to be formed, if it comes down, a support to be formed here, and then it breaks. That would like give a much more stronger foundational break. But even if it doesn't give like that structure, the way it's moving right now, it feels like if it breaks, it's gonna at least give like 20 pips. But that's ideally what you want to be waiting for nonetheless anyway. You still want to be waiting for your structure. So if you got your structure, then, you know, awesome. I told you my requirements for taking shorts. But Goldie is definitely cooking right now. And this funny thing is the daily is still bullish, 0.50%, but I don't think that really matters so much right now. I feel like that might have just been a pull up, a pricing in of sells that was heading towards that core CPI. Be nice if we created a support there before it broke. Is it 5 minute about to close though? Oh yeah, 5 minutes closing. Oh, man. Look at that. I said at least 20 pips. At least 30 pips by 20, 30 pips. You see, just so much volume. Sheesh. Didn't even create that support. What's this? One more just for dinner. You got slipped, huh? Or what is this? It actually doesn't look too bad. You just took it off the rip. Yeah, that's the selling pressure. Let's try and fill in this range. And that's what I just love about gold. Like, it just pushes. Gold just push. Like, as soon as it get through that wick, it just pushes. That would have been much nicer though if we created that support though. Right over here by 49.42. You got slipped to a sell stop. Daily bias is flipping as well now. I did that like twice. I also like did a small, but the push here was much smaller. Like waiting for a support here, and then it just pushed through it without the support. It still did about 20 pips. You see this? Quite forgiving, right? But I didn't create that support. The same way as here came in, didn't create the support down here or up here. Unless you kind of looked at this area instead. Boom, boom. That was a fake out in head and shoulders. Not as clean to see. It was not as obvious to see it. It was not as obvious to see that though. Not the cleanest. Cleaner would be that support down below. Because then you'd have this area to play with. Left shoulder, head, right shoulder. Boom, support, break. A lot smoother that would be. Because that is the head and shoulders right over here. You got a left shoulder, head, right shoulder. That's a fake out. Here, come down, support, break. See how much of this range is getting filled right close at 65. What's that? It's so easy, but wouldn't work on a proper. My trade was 2 seconds. If I hold it now, it would be BE or loss. But what is the point of that rule anyway? I don't get it. Like, what's the idea behind that rule? Like, why does it exist? Like, what effect is it to them that they say that it can't be that short? Like, they don't even give you real money. You're trading on demo accounts. They only give you money when you are successful. So it's not like you're actually trading for a fund. Plus, it just seems silly, you know? Like, risk is risk. Like, once risk is on, it doesn't matter if like it's 2 seconds or 1 minute or whatever. As long as you're in the market, your risk is on. It doesn't matter if you can be in the market for a minute and then risk can still be as volatile even after that minute. So I feel like it's just some kind of an excuse over there, so you don't benefit off, because they know these things. They know these things as well. These are very like educated people. They understand that most of the money in markets is made from people just getting in and out. Because for day traders, the way the market is designed, it's not designed to always just go in your direction like flawlessly. They understand this, so that's why they've removed that one thing that makes day traders profitable, so you cannot succeed. Otherwise, it just doesn't make any sense. Like scalpers, at least. They do this because it's efficient. In other words, they look at statistics from that point on. They create rules to eliminate this type of strategy. Statistics of people winning with it, huh? Yeah. People scalping their way to success. Because the whole idea, it's structured in a way psychologically for you to be one and done. Like, they want your mental to be in a certain thinking mode of one and done. Like these big trades, these, you know, but you know, like that's swinging. That's like if you're in a boxing fight and you're constantly like swinging. You know, the guy who's constantly swinging is going to get knocked out eventually. Because it's a bit obvious with his swings. But you know, just jab the guy in the face like real quick. Like if you're in a fight, you can hit a guy like this. Like straight on. If you're in a fight and you're going like, oh, he's gonna like see you swinging and he's gonna duck your swing and give you an uppercut. So they want you more like this. Because they know that the market is gonna give you that uppercut real quick. See right here? Market gave the uppercut. It's a pay like whoever scalp was scalping here, but then they came in with the uppercut. That's where they want you. Yeah, it's quite unfortunate. Tragic. Alright, see you later, John. Enjoy. Enjoy Valentine's Day this weekend with loved one. Thank you. You too. It's like quickly recalibrates as well, right? You see how like quickly it pushes, then it's like the market just knows. It just knows quickly come back up. Let's see, because of the... Let's say like an impulse to sell. Take a sell here. That push up was pretty big though. It's still like about 50 pips, but you see you get away like with the clean follow through, but you wouldn't get away with the retracement. That's the trick. Okay, well, at least it's open. The risk is open more. I mean, you could have gotten away here because you see it came back and retraced quickly. It only retest about 15.2 pips. That's the first retracement. First retracement came up to retest and then it pushed down again. The first retracements are usually like safer, and then it came down was like 67 pips. But if it comes back up again, yeah, most likely gonna go for a deeper one. First retracements are safer because it's usually in that spring. It's still in that spring mode. You know, and then it like kind of stops and then it gradually comes up, typically. I think it happened to my trade yesterday as well. If I'm not mistaken, it was the buy. I think we took a buy, but I don't recall properly, but I recall somehow that it had come into my entry or my meta trade. I was close. It pushed and then I saw like the PNL kind of go almost to even. And then it pushed again. What about news today? Yeah, we got news 8:30. It's gonna be neutral. You see the difference between the past? We had 0.2% here. Expectations are 0.3. We got 0.3, but those were neutral numbers. And we're expecting the same thing again here today for core CPI. So it will bring volatility, but it can bring a very random type of volatility. Maybe not something you want to be trading. Yesterday I took a bit of a risky trade. I actually took a buy shortly before the unemployment claims came out. Well, we had a setup and price was in momentum, kind of like it is right now, but we were in momentum for buys. And it was still the same idea that we spoke about on stream, was for price to come up and fill this range up towards resistance. I was cutting it close, but most of the time you'd be out of your trade anyway before the news comes out if it didn't manage to play out. But knowing gold, it would have definitely played out. How about GJ? Yeah, GJ looks good for a retracement up to break above resistance here. It's also up on the daily 0.40%. If like candlestick can close above and re-break the previous lows, you also have that SMA in your favor in confluence. If not, then pound yen has a support right over here in a range of 8 pips, but not as appetizing as the buys. The buys look a lot more appetizing here. There's a lot more room for them. We're like a 32 pip range above 208, 822. If you take a sell, I guess the idea would be volume-based trade out of this zone. So even if it's a 7-8 pip range, it could probably push a lot more than that since it's in momentum right now. So I guess the question here remains what direction it breaks. If we're going to break the highs, or it's going to break the lows. Ideally, I guess you'd want to be seeing lows get broken like this on pound yen for a continuation of the sell, because it is in selling momentum. It's basically doing the same thing that is happening on yeah, the same thing that is happening on what you call it, on gold. On gold, it's selling off, the daily starting to flip. So that's what I would be expecting from pound yen. Break of those accumulation lows, potentially continue with that movement to the downside.
Years we'll refinance the debt.
Refinance where, Michael?
We'll just roll it forward. If Bitcoin falls 90% for the next 4 years, we'll refinance the debt.
Refinance where, Michael?
We'll just roll it forward. I mean, again.
But yeah. you think banks would lend to you at that point?
Yeah, because the volatility of Bitcoin is such that there's always going to be value. Look, you're at 68,000 right now. Literally has to fall to 8,000. Then we just refinance the debt. If you think it's going to zero, then we'll deal with that. But I don't think it's going to zero, and I don't think it's going to 8,000 either. But the credit risk is de minimis at this point.
Delusional. Where are my whips? It's curtains for Bitcoin. Just the same way that it's curtains for pound yen over here. Awesome. GJ sells. Did you take them? It was a test. Were you going to take them? Or were you going to wait for me? You got GJ sells. GJ is coming down over here. It's coming down. Now we got a support. It's tapped into support. And man, look at this. Look at how much room there is for price to continue to move down bearish. If it gets below, this is 208, 648 level over here. Run, GJ. Run. It's the same thing we want to see with gold spot. We want to see gold spot break below like 49.33 and then continue to sell off again. That would be the idea here. Now we're at support, so you gotta put yourselves to break even now because you're at a support. Because you know at the support area here, anything can happen at the support. Anything can happen. Price can reject the support. It can go through that support. But all that price was gonna do was gonna move from here down towards this next level. And then if it keeps going, that's like just a bonus, you know? It's gonna be a bonus because it's just gonna fully play out the distribution rather. Just keep distributing because right now it's in a distribution phase. So if you manage to execute on that trade, you know, pretty well done. See, with TFX concepts, if you know the concepts and you've been executing on them for a while, then you just take the trade and let probabilities do the rest of the work. So I think the most important thing for any strategy is just truly to understand it. It's not just to chase a signal, but it's to understand why is the signal being given in the first place. But yeah, you see now price has this next range here. It's going to be around 22 pips. But GJ has been moving really, really nice of late, I have to admit. It's been swinging really good. You see like this nice little shotgun plays over here, little inverted head and shoulders entry confirmation to fill the range. Got the little head and shoulders here, inverted, boom, close above, shotgun, break above, fill the range. Like GJ is going back to why we love GJ so much. You know, because GJ is also one of those pairs which, yes, it moves slower. Like you see this move here on gold would have been like 40 pips, maybe like 50 pips. So on GJ it's like 9.8. Actually it's pushed about 11.7 pips. But it's still a big move. It's a big move, but it's 11.7 pips. It's slower, but it respects price action relatively well. I argue like it respects it more because I've been watching NQ, and I would argue that maybe it's like it respects PA a little more than NQ. NQ is still prone to certain Judas swings for whatever reason, but GJ is less. GJ does that less, and that's the reason why I used to trade so much of GJ. You can see from 2023, trade GJ, 2024, golden GJ, 2025. Golden GJ. Then we only stopped trading it towards mid of 2025 to leverage off of the gold spot volume. As you saw last year, it was the best year on gold. It performed the best out of all instruments last year. Gold, not gold, sorry. Silver did, but you know, then I think it was gold, then platinum. Yeah, look at pound yen here. It's now mopping up the next range. The clean traffic just gonna fall through these levels. So I really love sellers. I really love sellers in open waters like this. When you got sellers in open water, they can't help themselves sometimes, especially when price hasn't been doing anything like for a while.
Why are you running? Why are you running?
Look at the way it's just bleeding off. Pure distribution this is. There's not really a re-entry. This is just paying out the sellers from above. So I believe on the 1 minute time frame, there's no structure. It's just completely nothing, right? You just see like minor pullbacks because we hit that support, that initial support, where the point A to point B was. Now it's breaking through that support to now move from this next point A down towards that next point B. Like pure distribution. There's no hold up. Gold is getting ready for its continuation. It could also like pull up, but if it breaks below 49.33, we're looking for further downside. It could be a similar situation like what happened on pound yen as well, where it's like it breaks the initial zone and then continues to bleed throughout this next level here by 49.20, 49.28 down towards that next point, 49.12. Yeah, thank you for letting me know. AD Fad. We just mopped him up. Sadly, I don't sell gold. It will be a bloodbath on Friday. Yeah, right now it's flirting with that daily, like it's at 0.45%. Once you start pushing just a little bit more, daily bias should flip here to waiting. So it's given back a lot of gains because we already saw like highs of 1%, and now you can see it's really coming down again. So you can always like imagine if that gold was on a board somewhere and you're seeing the percentage gains. Like throughout the day was at 1%. You have Forex Bureau. You come back at lunchtime, you're seeing gold is now down to like 0.48%. So it's losing gains. But now when we look at structure, we can see where exactly it is that gold needs to get through for it to continue to bleed off. And at this moment, it's going to be 49.33. Otherwise, this 0.48% can increase if it starts breaking above, for example. All right, so you got now on gold potential buys right above these highs. Then gold can continue to move up to this potential buy, gonna be potential buy target on gold, and it's a really nice range. Start breaking above this area here, you have about like 242 pips on gold to recover. Let's just say like GJ coming and breaking lows, filling up ranges down towards that's gonna keep going towards like this next level. From that entry up here that we called out, it was about 35 pips down towards this level, but it was around 10 pips, actually, yeah, about like 8 pips down towards this next support, and then break that support. This would be the range for it to keep coming down. See how much of that it's filled up already. Still heading down to like 65% too. But with gold, this would be the buy. If you're looking for buys, maybe above like 49.51. All right, chat, I think I'm gonna head out now. Hope you all enjoyed the stream. I will see you all on Monday next week, London Open. So if you're still looking for buys on gold, I would say that's pretty much the targets right here. But for now, I think I'm gonna call it a day. It's Freaky Friday. Remember, don't over risk, don't over trade. Relax. Don't over risk, don't over trade. And I will see you all in the next one. Adios.